Oh, there we go. Okay, I was muted. Let me know if I'm coming in clear now, folks. How's it going? Happy Wednesday. Happy Tesla earnings day. All right, I see it. Okay, there's a couple seconds delay here, but hopefully my audio issues are sorted. Okay, awesome. Thank you, Sanju, and thanks for spending the Tesla earnings with me, folks. 346 sitting on the queues, only up about 28 basis points. Tesla 942. We had a massive rally, folks. A massive rally. Okay, perfect audio. Okay, perfect. Awesome. So, quick agenda. It's going to be an action-packed live stream we have here. Not only because the market is looking like doing like a 180 right now, but we have Dave Lee from Dave Lee on investing. I'm sure a lot of you guys are familiar with that in the Tesla community. Coming on in about 15 minutes. He and I will talk about Tesla earnings prior to the closing bell. Then he'll go onto his own live stream 15 minutes before. And then I got Tesla Economist Lee coming on right at market close. And then we'll digest the earnings report together as it comes on. Tyler, how's it going? Dragon, Gabriel. Folks, let me know where you guys are tuning in from in the chat. City, state, country, where you guys feel comfortable sharing. Hopefully all my audio stuff is A-okay. Anyone let me know if stuff comes around. 938 sitting on Tesla, only up 2.2% on the day as Jay Powell talks. Do you guys want me to pull up Jay Powell right now, or do you want me to just keep it on the Tesla ticker here? Don't want to bore too many people with Jay Powell. Jay Powell is kind of just reiterating what we know. He's staying a little bit hawkish. He's not shying away from the fact that the funds rate is really their main target way to attack inflation. And we can go into macro a little bit more. I have my own thoughts. Colorado, how's it going? Sacramento, Birmingham, awesome. Sweden, Starbucks in Los Angeles. There we go, Eric. Nice. Kirkland, Washington, New Mexico. Digital says from my kitchen. Boston, UK, Indiana, Australia, Missouri. How's it going? Stockton. I can pull up Jay Powell here, but to be honest, he's not. Someone's asking a question right now. I'll pull up I'll pull up. I'll do the summary as it comes through on my Twitter instead, just because I think he's just repeating the same kind of question answers that we already have at this point. Vancouver, Gary, local Vancouver fellow, North Carolina. Okay, 930 sitting on Tesla. We got to watch Tesla here. Looks like we might turn negative. The Qs have officially turned negative on the day. SPY is negative, both down 40 basis points. Looks like Tesla is on the way to turning negative here. $10 up on the day. I'm gonna eat the first Juju here. Okay, if you guys don't know, if you guys are new here, Jujus are oranges, citrus, tangerines, lemon, whatever you guys got. But strap in. It's gonna be a wild couple hours. Okay, there we go. So what did Jay Powell said? What did he say? Let me see here. Jay Powell, inclined to raise my forecast by a few tenths of a percent. Interesting. What else did Jay Powell say here? From what I was hearing from Jay Powell, it's pretty expected. Most of what he's saying, I must have missed something here that he said recently, but he couldn't have said something that drastically different, I think. Nice. East Vancouver, local. Santa Fe, New Mexico market doing a pump and dump. The market is entirely weird today, right? If you look at the Qs, we're kind of fighting here to stay only 30 basis points down. By the way, just so you guys know, we're going to have the Tesla earnings call as well live streamed here. So stay locked, stay loaded. Pretty much what my goal here is with this stream is to be like a one-stop shop for anything Tesla earnings related news. I can pull up CNBC. We can pull up obviously the earnings call, and then again Tesla Economist and Dave Lee joining us separate times, but Dave Lee's coming on first. So it's going to be interesting. 2 or 3 hours here. So stay tuned with me. Hit subscribe, by the way, if you haven't already and you're enjoying the content. Feel free to. Thanks for all the likes. We're already, before I even started the stream, we're at 125 likes. Appreciate that. What are the Qs? The Qs are the NASDAQ ETF. Rodfather says, someone have insider information on Tesla? No. This is all macro. This is all macro related. This is all Qs, depending on what Jay Powell is talking about right now. I think a big part of this as well are the yields. Now, the TNX, the 10-year yield is at 1.85% at the moment. You talk about bond vigilantes. In my opinion, I think we're probably headed to an over 2% yield in the next probably week or two here, probably 2.25% yield. Yes, that's going to have a dampening effect on a lot of growth, but I think it's going to actually prevent the drastic amount of rate hikes that Jay Powell and the Fed are going to have. You talk about the bond vigilantes a lot, right? And really, Jay Powell doesn't have to raise the rates for the effect to really hit the market. The market can hit the effect with just the 10-year yields. The market's already acting that way. Tesla's still green, only up 50 basis points though. The Booster, thank you for the super chat. Appreciate you, my friend. Yes. Okay. You guys are asking about what is baked into the stock. This Tesla earnings, and I'll talk to Dave about this a little bit. This Tesla earnings is insane. It's insane. It's one of the biggest, and it looks like we're about to go negative here, folks. 920 sitting on Tesla. Quite the U-turn from just half an hour ago. But again, this is all macro related. But this is one of the few Tesla earnings where you really look at what the Tesla analysts on Twitter and Wall Street analysts are saying and what is kind of being on projected on the street. And honestly, it's one of the high. There we are. We are now officially red on Tesla. We'll see how it shapes up once he's done talking. But it's one of the largest discrepancies really in a while, right? If you look at deliveries, 308,000 for the quarter, I think the street, someone know, I think the street's at $2.40 adjusted EPS. Is that right? Someone have the exact number on the street. The majority of Tesla Twitter analysts who have been a lot more correct than the street, mind you, are closer to $3. So we're going to see. Yeah, Jay Powell is talking. I can pull him up if you guys want me to. Here we go. Let me try to pull him up here. Don't know what he's going to say next, but we'll see.
And just the ratio of job openings to unemployed, you're seeing a very, very tight labor market. Now, we also know that labor force participation is significantly lower. It's a percentage point and a half lower than it was in February of 2020. Maybe a percentage point of that is retirements. Some part of those retirements are related to COVID rather than just regular retirements. So we think there is a pool of people out there who could come back into the labor force, but it's not happening very quickly, and it may continue to not happen very quickly as long as the pandemic is on. So that's how we think about that. We haven't made, to your specific question, we really have not addressed those questions, and we'll begin to address them as we move into the March meeting and meetings after that.
Okay. Well,
let's go to Rachel.
Hold on. Let's hear this question before I decide I want to keep on him or not.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm wondering if you can talk to us about any metrics that the Fed uses to assess how inflation affects different groups of Americans, especially lower income earners. And are you worried that the Fed underestimates or can't effectively measure the impact of inflation on some of the most vulnerable households? Thank you.
Definitely a problem.
So it's more a matter of, I think the problem that we're talking about here is really that people are on fixed incomes who are living paycheck to paycheck. They're spending most or all of what they're earning on food, gasoline, rent, heating, things like that, basic necessities. And so inflation right away forces people like that to make very difficult decisions. So that's really the point. I'm not aware of inflation literally falling more on different socioeconomic groups. That's not the point. The point is some people are just really in prone to suffer more. I mean, for people who are economically well off,
oh my God,
inflation isn't good. It's bad. High inflation is bad, but they're going to be able to continue to eat and keep their homes and drive their cars and things like that. It's more so that's really how I think of it. And we have to control inflation for the benefit of all Americans, But part of it is just that it's particularly hard on people with fixed incomes and low incomes who spend most of their income on necessities, which are experiencing high inflation now.
Well, inflation is so regressive. I think he needs to be a
Thank
little
you.
more.
Let's go to Edward Lawrence.
Thanks, Michelle, and thank you, Mr. Chairman, for taking the question here. So year over year, inflation's at a 40-year high. The input costs for producer price index for all of 2021 was the highest on record. Some investors fear that the Fed might be moving too late. Now, you said no decisions were made on the path of rate hikes, but was a rate hike more than 25 basis points discussed today? And as a follow to that, because I have problems with the mute button, as a follow to that, you testified that the supply chain issues could be worked out by the end of the year. You talked about that today. The CEO of Ford, though, told Fox Business today that the chip shortage will last into 2023. So today you said inflation will start to ease this year. I want to drill down and get a timeline that you see as to when we could see that relief. Thank you.
So I would not say that I would expect the supply chain issues to be completely worked out by the end of this year. I do not expect them, and I have not expected them. What I would say, and I have been saying, is that I expect progress to be made in the second half of this year, mainly progress, because we're not making much progress. If you look at a ton of metrics, you can find some that suggest that delivery times are shorter and inventories in some industries moving up, but overall, we're not making progress. And things like the semiconductor issue they're going to be quite a long time. I would think they'll go more than through 2023.
Wow.
In terms of being too late, I would just say this: our policy needs to be positioned to address the full range of plausible outcomes, as I said, and particularly the possibility that inflation will continue to run higher more persistently than we'd expected. And we think we are positioned to make the changes in our policy to do that, and we're committed to doing that. And that's really where we are. In terms of your question about the size of rate increases, we haven't faced those decisions. We haven't made them. It isn't possible to sit down here today and tell you with any confidence what the precise path will be. But as we work our way through this meeting by meeting, we are aware that this is a very different expansion, as I've said a couple times, with higher inflation, higher growth, a much stronger economy. And I think those differences are likely to be reflected in the policy that we implement.
All right, let's move on from Jay Powell, shall we? Let me just pause this guy. Okay, as we sit here right now, we've gone green again, mind you, only a little bit, but we've gone green again here on Tesla. Well, we will. Dave Lee will be joining us in a couple of minutes here, so stay tuned. A 927 sitting on Tesla. Now, look, Jay Powell's stuck between a rock and a hard place where he is. I don't think anyone could really have anticipated the way the economy shaped up. In my opinion, I think unemployment is worse, really a lot worse off than he's making it out to be. And on top of that, inflation is rampantly high as well with supply chain issues. But who better to talk about this than Dave Lee? Dave Lee, welcome to the channel. How's it going?
Hey, Yash, how's it going, man?
Good.
Good.
Craziness.
Yeah. It's a crazy day. Exciting. Lots of stuff going on right now.
Absolutely. Thanks for taking the time to join us. I know you have a live stream coming up right after you're going to leave us.
No worries. Yeah.
But let's talk macro markets, because I think that's really what's on everyone's mind. Have you been listening to Jay Powell at all?
Yeah. So I just got off listening to his speech, read his press release. It's spooking markets a bit. You see the markets come down. I think he's trying to not be too hawkish, but it seems like he's waking up to this reality that inflation is higher than expected. And all of the stats he's seen is unemployment is fine. It's pretty low, actually. So it seems like he's saying like his job is to deal with inflation, raise rates, run off the balance sheet after. But that's the thing, that the interesting thing is, he could try to be this neutral type of, face in the press conference, but once the minutes land in a few weeks, you'll start to see the interactions between the various members, and you'll see perhaps it being a little bit more hawkish. Maybe they're actually really scared about inflation, and he's not really sharing all that. So that's what happened last time. Like in December he was kind of like, oh, it's all fine, we're cautious and we're balanced. But then when the minutes came out, the committee was a bit more hawkish, or a lot more hawkish than people expected, and that's kind of partially the reason why you see kind of the increased volatility in the markets after that. So we'll see. Yeah, lots of stuff going on, definitely.
It is, and one problem of course that they didn't face, I think, in December's meetings, of course, was Omicron, right? And the just how terrible of a supply shock issue that was in January, and still is, quite honestly. So of course we're going to feel the lingering effects of that. That only really increases some of the price problems that they're going to face here in the next little bit. I kind of have this theory with the Fed right now, where I think they're purposely trying to be a little bit more hawkish to increase to kind of have those bond vigilantes come out, sell all these bonds, increase the TNX all the way up to, I think it's probably going to hit over 2% here, to kind of have that do the Fed's work a little bit for them. If they can go ahead, if they can front run, and they can, and bonds can, start selling hand over fist like they are right now, then really effectively you kind of are raising the rates in the markets, at least in the free market, but not the Fed's overnight fund rate.
Yeah.
But you're kind of having that effect kind of done, and maybe that tempers some of the inflation in the short term, rather than them having to do it with the Fed rate.
Yeah, definitely possible. I mean, the tricky thing is, like, with inflation, I think what's concerning to me is, like, the Fed doesn't really know where this is coming from. They're like, well, it seems like there's a strong economy with wages growing and unemployment low. There's some supply chain issues, like, will this pass, or is there something else going on? And they're kind of still trying to figure out. I haven't heard a ton of good explanations, because some people say, oh, hey, the economy's overheated. But then some people say, hey, we're almost at the risk of recession. The economy's weak. The way I look at it is I kind of dichotomize it, where I say there's an online economy that was actually doing fine. And it has been doing great the past 10 years. And is providing a huge amount of growth in the stock market, earnings power. Look at the NASDAQ. Who's powering the NASDAQ? It's like these big tech companies, right? And so online economy is robust, and it was robust even before COVID. If the government didn't do anything, the online economy would have done great. It would have got a boost. But then the Fed and the government just poured out all this, loose monetary and fiscal policies that unnecessarily boosted the online economy more than it needed to be.
Unfortunately, right.
It didn't even need anything. It needed, and then it wanted to kind of not have devastation on the offline economy, which happened, but you've got this overheated online economy that is rising, real estate prices rising, rent prices, used car prices, everything up. There's supply chain shocks, separately, but the offline economy, though, is still weak. And so the Fed is confused. They're like, okay, if we, are too aggressive in quantitative tightening, all this stuff, the offline economy is going to get hit hard. And we could push everything into recession. But if we don't do anything, maybe this inflation keeps on, at a high rate, higher than they expected. So I don't know. It's like the Fed is always like 1 or 2 steps behind, it seems right now. And it seems like I think they're not understanding the economic shifts that are going on right now. They just look at the economy as one thing. Statistics just show the entire economy. They're not really showing that there's a strong economy and a weak economy. And you need to isolate that. I think the Fed should actually give kind of support to the weak economy, the offline economy, somehow, and actually not completely taper bonds, and actually target the offline economy while pulling back from the online economy, and do kind of more of a targeted approach. But no, I don't see many people or almost anyone talking about this. I think that's perhaps too advanced for where the Fed is, and their kind of paradigm.
Like, what do you propose that they could do specifically to target the offline, like you're saying?
Yeah, I mean, you just do bond purchases. You continue the bond purchases, but you do it targeted to the offline economy. So you just say, hey, we're going to do bond purchases. We've ended bond purchases for anything digital online economy. We'll do a certain amount for businesses and industries that are offline. So travel, hospitality, restaurants, all this stuff, retail, and you kind of give a support to that, because that's like, that part of the economy is the most fragile. It's the most vulnerable in this decade, multi-decade shift, going digital. But right now, the Fed doesn't understand that So I don't know, they'll just do run one policy for all, right?
Well,
and hope for the best. They're like crossing their fingers for the best.
I mean, this is kind of the almost perplexing thing with governmental policy is that often what is the right choice doesn't always mean what's the right choice for the government, because optically you can imagine a scenario where they can pick and choose who the winners are, or pick and choose who to buy bonds from. It kind of paints this picture of, well, okay, well, if you're going to be last, the government will just support you up. Whereas I think if you have this kind of overarching blanket approach to the market, then at least you come off a little bit more like Switzerland, for example, right? You don't look, it doesn't look bad optically, right?
Mm-hmm. Sure. Yeah, I mean, that's the thing. The Fed has never had a way to really understand the economy in its different parts, and they're not really into tech disruption, and they're not really attuned to that. And traditional economics and macro policies have always been one policy fits all, right? And but how can you explain this inflation issue? I think otherwise, I think you have to say, hey, part of the economy, the online economy was overheated, has been overheated. Look at Microsoft reporting yesterday. They're like, everything's fine, like our business is booming, and everything. And so, but then you'll see like the offline businesses, they'll probably report and they'll say, hey, we have big issues with supply chain and getting product on the shelves, and we don't know what to say for this year. And so I think people are going to get confused, where it's going to continue. I think you're going to see the online strong companies report great earnings, and then people are going, oh my gosh, everything's fine. And then you'll have the offline companies report like kind of struggle / uncertain stuff, and then people go, oh my gosh, we're in for trouble, and we're going back and forth. This is like, it's crazy.
Good perspective there. I think also part of the problem that's not talked about enough is really people that are unemployed right now. He said it himself today. He said there's this massive amount of job openings, but there's not a lot of people that are either finding the job that they want or that are even choosing to work, right? And maybe it's because the pandemic kind of accelerated the people's needs to follow their passion a little bit, to change careers, to really look themselves in the mirror and a little bit and be like, do I really want to be working at XYZ corporate job? And so there's, I think, a degree of just transition that we probably have to go through as well. Couple that with supply shocks, right? With commodities and prices of commodities and going up, and a lot of people think will go up dramatically in the next couple of months here. So it's just so multifaceted, like you say. And as we sit here, the only tools that they want to really target are just changing the interest rates and kind of really going from there. And you can't really blame them when I think it was the 80s when Milton Friedman came in, and there was no credibility to the Fed whatsoever back in the days, right? With all the problem with inflation happening, and he just came on and he was like, hey, look, like we got to raise rates massively at this point, and it hurts in the short term, but long term, it's really what brought a lot of credibility to the Fed. So tough market we're in. Let's transition a little bit to Tesla, shall we?
Sure. Yeah.
You had an awesome video out yesterday with what really matters for Tesla earnings. Watched all of that, of course. But I want to get just your kind of overall vibe with this earnings. Doesn't it feel a little bit different, this earnings call versus the last 2 or 3 that we've had even?
Yeah, I mean, I've been looking forward to kind of 2022 as a breakout year for Tesla's earnings, because, I think last year was a breakout too, obviously. And it happened a little faster than I expected, with kind of the pull up of demand and kind of raising prices and all this stuff. Mm-hmm. But my whole expectation has been, like, as Tesla ramps their revenue, like their business model starts to reveal itself in terms of how lucrative their business model really is. And I think I've been highlighting some spreadsheets about their operating margin, going from 5%. Q4 of 2020, probably going to be at 18% this quarter. And if things go well, it could be over 21% at the end of this year, maybe 24% by the end of 2023. Like, this type of operating margin growth is like so crazy. It's unheard of. Not just that, but that Tesla has this crazy runway where they're guiding 50%, unit growth for many, many years to come. So it's like, it's crazy. Just the level of open kind of blue ocean that's out there for Tesla.
Yep.
And, a lot of it will depend on how lucrative or strong their business model. Basically, what are their operating margins, right? Because if your operating margins are like 10%, and you grow your revenue X amount, that's great. But if your operating margins are 20%, that's like double the profit, right? Or if your operating margins are 30%, that's 3 times the profit. So that affects valuation tremendously, right? It could be double or triple the valuation you would give at a lower operating margin, or even more, because it's just like those businesses are so rare, to have like really high operating margin in these crazy markets. So yeah, that's, the big thing I'm looking for is just kind of, I think this quarter is I wouldn't say 100%, in the bag, but it's like it's a great quarter because the deliveries have like already, have basically, forecasted that. It's just, going forward, there are risks that Tesla delivers such a crazy quarter that, maybe there's a lot of reversion to the mean in terms of, used car, new car demand, different, people say they thinking, there's no limit to Tesla demand, but who knows, maybe, there's always that risk factor of having to lower prices depending on the overall economy and situation. It could hurt margins, and then the whole reverse thing can happen too, where people are like, oh my gosh, operating margins are shrinking, right? And then you just get clobbered by the market and investors. So that's the biggest risk, is that kind of Tesla almost is too good, this quarter, and the hopes are just like, shoot up to the sky. But yeah, overall though, I'm bullish because I think with these 2 new factories, I think these are not new products. The Model Y, this is the Model Y, right? They're changing a few things like the structured battery pack, 4680 cells, et cetera. But you're going to gain massive efficiencies with this and economies of scale. And so I think you're going to have higher margins, and FSD isn't getting worse. It's getting better, and I think take rate is going to help a bit. So yeah, a lot of positives for this year, but overall, like, I'm not too concerned about actually this year either. For me, this is like a multi-year story, and I'm more just like I'm trying to understand more the story like 5 years out or 10 years out. That's where most of my energy usually goes to.
Yeah, I like it. Long-term approach. I got a quick question about operating margin and COGS. With their new factories, Austin, Berlin, do you know the amount of expense or capitalization or non-capitalization that there might be this quarter from not ramping, but preparing and hiring workers? Does that not have a dampening effect to margin, or can they not capitalize that? I'm not entirely sure.
I mean, I'm not an accountant, but my understanding is that pre-production, that you actually don't take kind of the production expenses in your operating expenses, meaning so a lot of even the depreciation, all this stuff, a lot of it accounts when you start producing and selling cars. Actually, when you sell cars,
we start recognizing revenue.
Yeah, and usually it's like a lot of times it's like you start your depreciation calendar, or per car you have a certain amount that you have to factor in. For example, you have like 5 or 10,000 employees, and you're only making a few thousand cars, then you're going to have actually high cost of goods there, right, to make each car. And so usually the first quarter is going to be kind of negative margin, and then it'll ramp up into slightly positive margin, and then third and fourth quarter you're looking at a stronger margin. But that's the thing, it's like it's not a ton of cars though in the bigger kind of, you have Tesla over 1 million car run rate. So yeah, it doesn't seem like it would be a huge hit on margins, even in Q1, maybe a slight hit. So I'm projecting slightly lower, but I think a lot of it will be offset by the efficiency margin gains actually from just Fremont and Shanghai as they grow as well.
And also 4680s, of course, buy you a little bit more extra padding, hopefully, into that. Wild swings in the stock. I'm not sure if you've been following this.
Yeah, man, it's like ridiculous. It's crazy.
Somehow we're back at, I don't know how, but we're back at 940. It seems like we were just at 900 a couple of seconds ago.
Yeah.
We almost touched 990 or high days 987. Yep. So are you trading this earnings at all? Are you looking for any? I saw that you were interviewing someone interesting on Twitter Spaces talking about their Lotto earnings play, and Are you at all looking at?
I don't really. Yeah, I'm not really. I don't really have any like short-term calls. Yeah, basically almost everything's in stock. I do have like a kind of a smaller kind of trading account where I do some trading like in an IRA or Roth IRA, but even that I hold like stuff that's further out than just weeklies. Like weeklies, the time premium, just like it's so crazy. You really have to. It really has to go your way, or else like it's like you're just in a world of pain. And I think also the size of the movements, once it gets up to, let's say Tesla's at $1,000, $1 stock price, you're not gonna see these like probably most likely these 300 or 400, 500 price moves in a week or two, a couple of weeks. Like it's
well, we did on delivery day, remember? January 3rd. That was crazy.
Yeah. I mean, you're gonna have occasionally stuff like that, but I mean, most of the time, it's going to be pretty controlled. I think typically, the option writers, makers have the upper hand, just with the priciness of these options. But yeah, how about yourself? Do you have any plays going
on? Just shorter term debit spreads for, and I think middle of February and May, and then just stock that I don't even log into and look at. I'm kind of the last 2 or 3, 4 or 5 months have just been so hectic in terms of having a trade or doing shorter term stuff that it's just kind of brought me back to reality a little bit to be like, okay, let's just focus longer term on a lot of this stuff. But it is fun, right? Have Emmett on sometimes, and Emmett talks about what plays he's seeing, and then you see on Twitter, of course, those, and of course, none of this, guys, don't none of this is financial advice. Do your own due diligence, and definitely don't recommend doing short term stuff. But on Twitter, you see those people that have, like, there's I'm not sure if you saw this Twitter thread of this person that publicly went out and said, hey, I'm buying lottos for deliveries. And then he woke up Monday morning or whatever it was, Monday morning, I think. And he was massively up. And you see those, you kind of get a little bit too excited than you should because, 9 times out of 10 it doesn't work out. But,
yeah. I think, betting pre-earnings, like you really have to have an edge on earnings. And I actually think this earnings, like, I could understand, people who could bet, just because there is a big dichotomy or divergence where I think, you probably have one of the best earnings ever for Tesla. Everything just lines up. All of the stars are lining up for Tesla right now with this quarter. And then you have the combination of the macro market and the expectations for anything is just really low. And so, but then on the flip side, you do have this just this cap of, growth is out, risk is off in a sense. And so that dampens how far it seems like Tesla can run in the short term, but there could be a bounce and it could be big enough where it justifies some of the risk entailed. But of course, everyone has to weigh, their risk tolerance and all that stuff. Yeah.
100%. Now, moving into earnings call a little bit, I'd love to get your thoughts on what are the couple of things around, let's say, battery production or Cybertruck or Austin. Like, what are the couple of things that you're keeping a kind of a keen eye on?
Yeah, I mean, I think one of the things that I think I'm looking into is how is Tesla planning their next kind of leg of production increase? So, for example, this year was planned probably 2, 3, 4 years ago, right, in advance to get to this level, let's say 1.5 or 1.6 million production cars. So this stuff has to be planned in advance. You need not just the factories, the locations, all the supply chain, all that stuff, but you also need the right product that will enlist that type of demand response. And so I mean, I think Tesla's next year, 2023, they have Cybertruck. And if they can continue to ramp, Model Y, the Semi, but I think you might need actually a new vehicle by the end of the year, actually possibly to start production, maybe to start in China or so, and actually just to sell domestically to China or even Europe. But I think that's what I'm looking for, because if you think 2.4 to 2.5 million vehicles next year, what is that going to be? Is that going to be all Model Y and Model 3? Are you really going to sell over 1.5 million Model Ys next year? It's that's kind of rough, 500,000 Model 3s, maybe a little more. But I mean, you might be able to reach close to that, but it makes sense. You're not going to get the 2024 numbers. Let's say you do 50% above 2.4, that's 3.6. How are you going to get 3.6 out of Model Y and Model 3? You can't, it's like, it's not realistic unless you drop the price or you do a complete, I don't know, a huge revamp. But I think, you're looking at a next gen vehicle. I wouldn't be surprised if Elon mentions it, because this is the next leg. This is a 2024. You need something to pave the way for the 50% growth. But he might not want to really or talk about it because he doesn't want to hurt sales right now, right? So there's that dilemma. But that's kind of, I'm looking for hints on I think this year, next year is fine, but what's Tesla doing to plan for the next thing? Because if they don't plan right, you can have a 1 or 2 year period where the deliveries kind of just stall out. I won't say 0%, but it gets, you don't see that much, not even close to 50%, right? Maybe 20 or 30% because they don't have the next leg planned accordingly. Up until this point, Tesla has been ruthlessly focused on that. They've done a great job with that, but that's, something to look forward to, definitely.
I know Elon said he expects Model Y, is it this year or next year? I forget, the years kind of get mixed up, to be the best-selling car. And I think the best-selling car in the world is a Corolla 1.2 worldwide. So I think he said in units as well, not dollar volume. So if we go by that, then we can expect Model Y to probably, and Model Y is just killer demand across the world. I kind of wish I had a Model Y instead of a Model 3 some days, but I can anticipate it being there. But what about Cybertruck? Because I think Elon also is probably hesitant to release yet another product that he's going to say, is coming out, and yet he has a backlog of cars that he still has to, Roadster, Cybertruck. So I almost wonder if, like you said, probably a little bit more reluctant to share a new product details where they haven't started delivering Cybertruck yet.
Yeah, that's the thing. Most people don't care about this stuff like few years out, but to me, that's where make it or break it. Because, for example, let's say you do 1.2 million Model Ys max, and let's say 600,000 Model 3s, hypothetically, that's 1.8 million cars, let's say in 2023, next year. And then let's say you do 400,000 Cybertrucks. I don't even think you can do that. Maybe 300. Let's do 300,000 the first full year. That's 2.1 million cars in 2023.
What's the growth rate on that?
Yeah, so you're kind of short. So maybe you boost up your Model Ys to 1.3, and maybe you boost up your Model 3s to 1 or to 700. So you have 2 million, plus 300,000. Cybertrucks 2.3, and then 100 Model S and X is 2.4 million, but that's barely, right there. So, and then you don't have the next year. You don't have anything next year because you're tapped out of a lot of these markets. Maybe you grow slightly. So you really need the next leg. They that has to be the key focus for Tesla right now. I would imagine in internal meetings, it's all about the next gen car.
Gotcha.
What the timeline, how they're going to roll it out and all that stuff. They're just not talking about it. People aren't privy to the internal discussions, but
Fair enough. I like that perspective. Yeah, I think it makes sense. And I think it also makes sense that they wait until Cybertrucks start delivering for them to come out with yet another product that they're going to take pre-orders on, just because the amount of hate that Tesla gets for cars that they're not delivering on yet, right? So, okay, I got 5 minutes here with you before I know you have to run to your stream.
No worries, yeah.
So moving forward kind of, and seeing that Elon's on the call, we're looking to get a roadmap, and you're saying you're probably expecting perhaps some sort of a model announcement. How much do you think energy, because that's kind of my going thesis right now, is I think energy is going to be a large portion of the call. That's my guess, because I think with batteries and kind of next leg of Tesla story is energy. Do you have any thoughts on that, on Tesla energy?
Yeah, I think it's possible. Elon's been pumping energy for quite a while. And there's been a lot of people in the past that have kind of, I don't say been burned, but disappointed by some of the guidance. And so I think people have reverted to the other extreme of extreme, caution and conservatism. I think the main limiting factor is just availability of cells. And the reality is, if there's still short cells for cars, then they're going to prioritize cars because you get a higher basically gross profit off of each car, per kilowatt hour basically. And so they're still waiting for the Tesla Semi too. That's basically a cell issue, right?
Yep.
The Cybertruck is a huge cell issue too. Like you need a ton of cells. This is a big battery pack. And so I think, you could see some growth, but yeah, it's going to be very limited by Cybertruck and Semi. And then you've got this next gen car. So it all depends on how fast they could scale their own battery production, I think, and how fast like their suppliers, can give cells to. But yeah, we'll see. I mean, I think eventually Tesla will get there, where energy grows like crazy, but I don't know.
Right. So you're saying kind of where the marginal demand is the highest is cars, and the marginal utility is the highest in the car level. So just amplify that, optimize that, push that until the point where marginal demands are, let's say, equal, and then shift over to energy. Okay, makes sense. Yeah. I wonder, and we talk about analysts a lot, and what they're projecting. Don't really see very many analysts ever talk about how big the energy side of the business is. I know you talk about it yourself. Do you anticipate it, kind of like Elon says, to be as big as the auto business in terms of operating margin and leverage and cash flow one day too?
Yeah, I mean, I think people misunderstand his thing because I think he's talking about being as large as the auto business in terms of like kilowatt hours, like battery size, not in terms of revenue. Just you're gonna get a lot more revenue off of a car just because you're adding a lot of extra stuff on that. It's easy to copy like an energy storage, like battery pack, for storage or something. So it's typically going to be a lot lower margin. You're just not adding on, a lot of extra unique value to that. So yeah, I don't see energy this decade being like, reaching obviously auto margin or auto revenue at all. But that said, in the next decade, 2030s, if there is some type of energy breakthrough that Tesla gets because they're investing so heavily in R&D, which I think there's a good possibility, then you could actually see Tesla become a dominant energy company in the 2030s. That's something I think people are underestimating a lot.
Yeah, absolutely. That and would you put robo taxis in the level of underestimation as well, or would you put probably the Tesla by it, judging by your tweet?
Yeah, definitely. Yeah, because all of this stuff leverages AI too. And so I think, ARK Invest had their big ideas report, and I was counting 5 out of like 15 or so areas. Tesla is pretty much the dominant leader or one of the dominant leaders. And it's like AI, ride hail, autonomous logistics, robots, all this stuff. And so there's a convergence of a lot of different things. We have AI, robotics, EVs, like all together at the same time. There's going to open up huge business opportunities. These are like new markets, new multi-trillion-dollar markets that Tesla just needs to squeeze their way in because you've got a fundamentally better business with AI, and EVs are much cheaper. It's just like, it's ridiculous. Yeah.
Absolutely. I'll let you go here, but before I do, we're going to play a Tesla closing price guess game with the audience here. Love to get your guess as to, and again, it's Price is Right rules. So if you go even a penny over, you're out. Yeah, closing price guess if you have one. You're in the spot a little.
For today or after
today.
Hours?
Just for today on the closing cross.
Oh, okay, yeah. So we'll say 9:32.
9:32 on the dot.
Yeah, 9:32 on the dot. Yeah,
okay.
I don't think it. Well, yeah, we'll see.
That puts you at a severe disadvantage, just so you know, whenever you finish on the dot. But Sure. It is what it is. Thanks, Dave, for coming in. You can come again next time, and cheers, and good luck on your live stream as well.
All right, cool, man. Okay, talk later. All right, bye.
All right, audience, folks, chat. There it is. Okay, I see all of the guesses coming in here. By the way, Jan, thanks for the 50 Swedish krona. Tesla is trying to secure both battery deliveries and raw materials, nickel, lithium with suppliers. When will we see a deal with a recycler? That's a great question. And we know JB Straubel has his own recycling thing going on. Maybe, just maybe, with Redwood, there's a partnership in the future. Makes full sense. By the way, I really like I like the bullishness a little bit here. 1100 with the guess on CJ. We'll find out who's right in 15 minutes. CNBC is off, so we got nothing tuning on in there. Again, folks, thank you for joining on Tesla earnings stream. We have Lee from Tesla Economist coming on in the next 15 minutes. That's going to be super exciting. Hit the like, hit the subscribe if you're enjoying the content. Alrighty. Let's see here. So the markets, just while we were talking with Dave there, we recovered a little bit. We're 934 sitting on Tesla at the moment, and we're up about 1.7%. The NASDAQ, mind you, is still negative, 30 basis points down. SPY still where it was back then, 40 basis points down at the moment. So Tesla's seeing some relative strength to wrap up or to close up this power hour. No, this is not after hours guessing, but maybe we'll play after hours guessing right after our closing price guess and before the earnings report comes out. Thank you, Alex. Appreciate that. Thank you for being yourself as well. By the way, really appreciate you guys spending what is going to be three and a half maybe hours here with me. You could be anywhere else, but you're here on the channel with me and enjoying it. So appreciate it. Thanks for subscribing as well. Your subscription notices should be coming up. I got, in case you couldn't tell, I got a new software to stream with. It's kind of interesting. I can bring in guests with a link. I can pull up. What I can't do is have like the cool Tesla ticker next to my Chrome or something. But still cool nonetheless. Okay, so let's move on to something a little bit more interesting. Let's move on to options and how the market is shaping up in terms of flows as we close the day. So here we go. Let me hit refresh here just to make sure this is all fresh data. We're seeing quite the divergence, folks, in options order flow at the moment. Options pricing is almost signaling a 980, 990 price with the net options flow at the moment. And we're currently, of course, sitting here at $934. So really good price action with options. I'm going to change this for a second to the 30-minute. Just take a look here how this changes. This is TradyTix, by the way. They are a sponsor. Well, they're an affiliate of the channel. Link is in the description if you want to check them out. Folks, check this out. We're seeing a huge divergence to the bull side on Tesla with the options flow that is coming in. Let's take a look at the daily premiums heat map. We got a lot, 23.2 million of 900 strike calls coming in, or net bullish flow here, and 800 strike in the money as well. So, not huge there. Let's take a look at, IV rank, folks, is pretty high as well. Hold on. So that was $40 million worth of 800 strike calls that came in. I also want to pull up, if I can, just the the TradyTix AI, where I can hopefully change the stock here. There it is. Put in Tesla. What times will earnings be released? It'll be 2:30 Pacific, 5:30 Eastern time. So the price simulations on TradyTix are saying on the bull side, price simulation is about, upper end is about $1,011 a share. Neutral price simulation about 981, and the bearish side is about 919. So we're trading a lot closer to the bearish price simulation that they have here. Dark pool sentiment has been green for the last couple of days. That's interesting to take a note of. And social chatter, of course, has picked up. Again, we talked about this a lot in December. The monthly seasonality for Tesla is second highest in January. It's about a 67% win rate. 67% of the time, Tesla finishes green to end the month in January. So as we sit here, I don't think we're close to that at the moment. Let me pull up the monthly candle and see. Let's see how much work would have to be done for that to hold true. Change this to the monthly. Wow, quite the downtick, eh? So this is our monthly candle. For us to finish green, we'd have to finish over $1,151. Again, this is because of the gap up that we had for deliveries. Congrats, Teddy. Welcome. Teddy's getting his Model Y performance. That's awesome. So we got 10 minutes here till close. Just going to message Lee to make sure everything is good on his end. You guys know, of course, you guys know Tesla Economist, right? You guys watch him too? Some of the best, most informative, consistent content in Tesla YouTube, in my opinion. Ready whenever you are. It's going to be an exciting time, folks. It's going to be an exciting time. Nothing on CNBC. They're talking about the Dow. Stefan says, yeah, do you ever wish you were on Eastern time with regards to the market? All the time. I do. I don't want to live in Eastern time because I'd miss a lot of the Canucks games here late. But yeah, waking up and the market starting at 9:30 instead of 6:30 would be a game changer. It would be a game changer for sure. Let's see here. Stock split. No, I don't anticipate a stock split news to happen. I would not bank on that, quite honestly. It's probably safe to assume that there's probably going to be no stock split news or announcements or anything like that on the earnings call. Nor do I think it's worth betting on it. But if it happens, I'll welcome it for sure. 934 sitting on Tesla as we sit here. Let's look at the options pricing for tomorrow. Let's see what we got going on. The market's pricing in $45 rounding on the call side, 45, so about $90, maybe not round up to 100. $100 move. So a little bit more than 10%, 10, 11, 12% move for Tesla earnings for tomorrow. That's pretty hefty. I think 10%. I think the average is about 8. I could be wrong, but that's quite and again, I think what a large portion of today's move has to do with is the fact that FOMC was talking. And so when we saw these big, huge spikes and downturns, I think a big portion of that volatility has to do there. All right, without further ado, I've got here Lee. Let me add Lee in here. Lee, how's it going?
How you going? All right.
Yes, what a wild day in the market. Hey, were you watching?
Yeah. It was pretty volatile, right?
Well, I think high of day is 987, currently sitting at 930. Low of day is 900. So pretty much $100 move intraday up and down.
Right. So what was the top? Like we were up like 6% at one stage, was it?
5 or 6%, I think, or actually maybe even more than that. Yeah. And that was
down like 3% as well.
Down probably 1 or 2% at most. Yeah, right. I think it's been a wild ride. By the way, the audience loves you. Chat loves all of your YouTube content. We were just talking about that. Right. How giddy are you about earnings this time around?
Well, I'm quite invested on this one, so we'll see. But I think I can write off some of my options, but I do have them spread out February, March, and April, just to highlight any of the other potential events rather than just earnings, perhaps factories opening and things like that.
Okay. And so February, is it the February monthlies that you're holding?
Yeah. So I think February 18th was my expiry. And
gotcha.
I think I can't remember the March, maybe 18th as well, and April around there, mid-month. Yeah.
I like it.
So yeah, I mean, April I'll get delivery numbers for, but I won't get the earnings.
That's true.
Yeah.
I mean, if this quarter is any indication, I think it's probably better that you just have the delivery numbers and not worry about the earnings too much. But I guess we'll see.
Well, it's just like, I was back in December and I was just like, oh my gosh, there are so many potential major events that can really move the needle here. And then there was a dip, and I was just like, okay, this is an opportunity. This is an asymmetric investment. It's a calculated risk. I understand what I'm getting into. I'm not betting the house or anything on it. It was, but if I win, I win big. If I lose small-ish. Nice. I can handle that loss. But awesome. The potential win was huge. I mean, there was perhaps tenfold in some of my returns it could have been. So yeah.
And of course, folks, none of this is financial advice to your own DD. This is just Lead and I talking about what we think.
Anything. Yeah, it was just a bit of fun.
and it is. I mean, it is, honestly. And what are you expecting for an after-hour move, or what are you hoping for, I should say, for an after-hour? Of course, you're hoping for a massive move, but what's kind of your mean thesis on
it? Might be maybe a little bit of a sell-off, and then I think people will start getting their heads around doing the numbers and working out, hang on, this PE ratio is getting a bit low, and hopefully some more buying that. Yeah, so I'm hoping we'll be up at the end, maybe above 1,000, but also depending on what Elon says as well in this earnings call, could be anything really.
Absolutely. I think Bradford was saying the same thing. He's saying that's kind of a wild card having Elon on. Mark's asking, by the way, how are you liking your Model 3 performance so far still?
Well, I just got back from an 8-hour road trip yesterday, and it was awesome. So yeah, I went to Queenstown. So it's like the Aspen of the Southern Hemisphere, and it drove like about 8 hours back, and yeah, it was just so much fun, awesome. So comfortable. Loved it all the way. Superchargers were useful as well. I mean, New Zealand's not great for supercharger network, but it was still enough, that car is just phenomenal. There's nothing that's made me this happy like that I've bought.
I love it. How many superchargers did you have to stop on that road trip?
I only had to stop at one, but I did stop at another third-party one just in case. I didn't want too much range anxiety, you know.
Yeah.
Yeah.
So is it? Sorry, did you say two?
Yeah. One supercharger and one third-party one.
Oh, so okay. So it wasn't 2+1. Interesting. So you got 8 hours worth of driving off of one, and was that third party also level 3 fast charging, or was it a slower level 2?
I think I was getting about 50 kilowatts.
Okay. So you probably had to stay for a couple hours.
Well, it was just a quick bump up, yeah, just a quick top up. But the Tesla ones were giving me about 112 kilowatts. Yeah.
Oh, you know what it is? You have the performance, so of course you have the higher range model then.
Yeah. I get like supposedly 550 kilometers, I think.
Okay, that's substantially more than my standard range plus. It's only 420, but I think with highway driving, you probably get to like close to 400, maybe at most.
Right. You want LFP?
You know, I was going to ask you how I should find out what I'm on, because it's the 2021. I got it end of 2020. It was the 2020. It was one of the first batches of the 2021 Model 3 Standard Range Plus.
Right. Yeah. I think that's probably going to be nickel based. Yeah.
Nickel based. Okay.
Yeah. Because you would come from California.
Yeah, came from Fremont. Yeah. And you're on LFP.
Yeah. Well, no. I bought one for my wife, and that's LFP. Yeah.
Okay. Oh, so you have two Teslas in the family now.
Yeah. I couldn't help it. Like, yeah, I had to buy another one. Like,
I love it.
So I've driven hers, and it took like she had it for like a week, I think, or 2 weeks, and then I finally decided I'll go and try it out because I just didn't want to sacrifice having to drive mine. I just want to drive mine all the time. But I thought, okay, I'll try hers out and just give it a review. And I was blown away. I could not believe it. It was so responsive. I test drove it around the hills, and it handled really well. It was a brilliant driver's car. It was just fun. Handled well, had responsive performance, rear-wheel drive. It was amazing, absolutely amazing.
Yeah, and by the way,
LFP for the win, you know.
and by the way, folks, like Lee is not lying. Like what really turned me on Tesla was going for my first test drive. That really did the 180 for me to really dig more into what's happening here. So if you haven't, go for a test drive into Tesla. Ask a friend. Go to the dealership or go to the Tesla service center. Ask for one. Trust me. And especially if you're invested in Tesla, like Lee, don't you think it's quite important that if you're invested heavily in Tesla, that you go out and at least test drive one if you haven't?
Yeah, I mean, I did every opportunity I could to try and test drive them. I was traveling around Los Angeles. I go to one of the malls, and immediately the first thing I do is go to the Tesla dealer and say, "Can I go and test drive a car?" And did. It was market research, you know.
Exactly.
When I was in Dubai, they had Uber, and you could rent electric Ubers, and they were always Teslas. So I'd make sure I always test drove those or got driven in them, ask tons of questions all the time. But in reality, even test driving, it doesn't come close to owning. And how much more bullish it has made me owning this car. Just such a product, and you just kind of understand just how clever it is. And then you go back to an ICE car or something, and just like, oh, okay, I do not want to be in this car. Everything about it is wrong. It handles bad. It smells like also the screen. Anything else that doesn't have that screen, I just found I was missing that a lot too.
Absolutely. No, for sure. It takes a little bit of getting used to, but it's a lot easier when you go back to your ICE. You're like, well, there's less technology here, but it seems a lot more complicated, if that makes any sense, right?
Yeah.
So, okay. So we got we got what, 1 minute here until close. Tesla sitting at $938 as we sit here. So it looks like Dave Lee's prediction is going to be a little bit off, but to the good side. Let's talk earnings. We're expecting the report any second, probably 5-10 minutes after close. It could drop. Expectations on your side for the report?
Yeah, so I've got my EPS at around $2.53.
Okay.
What are your thoughts?
Oh, whoops. Is that adjusted EPS, non-GAAP?
Yeah, diluted.
I'm hoping for a little bit higher.
That was GAAP diluted, yeah.
Oh, okay, yeah. So $2.50, and then do you remember what your gross margin expectation is for this quarter and your operating margin?
Yeah, so my gross margin I have at 32%.
32%. Okay.
Yeah, so we were at 30.5 last quarter, obviously. And I'm thinking that because a lot of China's been ramping up, that they have better margins, plus small Model X and S, which probably have better margins too. and more efficiencies in general. So I'm hoping about 32.
Okay.
And yeah.
And by the way, this is not this quarter. This is last quarter. I'm just pulling it up so we have context. So last quarter, including ZEV credits, was 30.5 gross margin. And then operating margin was 14.6 as we sit here. So just, again, this is not this quarter.
So operating margin, I'm at 18.5% now.
You're 18.5? Wow, that's massive. How do you think that if that happens, and I guess we'll find out in a couple of minutes here, but that's a massive, massive shift if that would happen. I was just talking to Dave about how there might be some lag from Austin and Berlin in terms of expenses on Tesla. Do you anticipate some of that to happen, or probably more to happen next quarter?
Yeah, I mean, if you recall when they started ramping up the Model S line, suddenly the margins went down a lot. And I'm thinking we're going to see something similar again with Austin when that starts ramping up. The margins will go down again. I mean, it just makes sense. You've got all that extra overhead, and you have relatively small run rates.
Absolutely, but in terms, I guess, with respect to quarter four, not expecting very much headwind on this earnings report from Austin and Berlin, even in terms of expenses.
No, not massively. I mean, I have my OPEX up somewhat, but I mean, not majorly, no.
Okay, great. And so the amount of traffic that folks, by the way, as well in the chat, let us know as soon as you guys hear that this is out, because I'm refreshing frantically. It always seems like one person gets it a couple of minutes before the other person, and they just share it with everyone. But it's exciting times ahead.
And yes. Yeah, so I've got my my gap earnings at like 2.7 billion as well for the quarter.
2.7 billion gap earnings. So that would interesting. And what are you anticipating? Any sort of guidance update from Elon or Tesla, or just kind of stick with what it is?
Yeah, I'm not sure. We'll see, I guess. Yeah, I don't know. Well, I think this roadmap is really going to be quite a big deal, really. If Elon's coming on the call, he's got something to say, right?
Yeah.
And I mean, it could be all sorts of surprises. We got so much we're hanging out for now. I mean, we've got maybe an Austin opening date we might have officially, which would be great. We might have some 4680 specifications.
Yeah.
Possibly they'll update the website, and now we'll be able to order the 4680 version. You can see the difference in weight and performance, etc. And maybe there'll be some guidance on the 4680 production run rates and ramping expectations, which I think is huge. It's all about the batteries.
Yeah.
And that's
Rob, sorry. Go ahead.
No, you go ahead. Sorry.
I was just going to say, Rob Meier from Tesla Daily said something kind of astutely on that point, where he said FSD price going up a week before earnings call might hint at some sort of product update or product release, because I think they did the same with the S and X refresh when those were released last year.
Right.
So maybe 4680 is you could be right. Maybe that's going to be a hot topic of discussion on the earnings call, which would be welcomed.
Yeah, I mean, the growth of those two companies are down to the 4680 production line. So that's really what those two factories are about. But I mean, we could have some surprisings in the earnings as well. I mean, they could sell some more Bitcoin. Bitcoin got really high that quarter, and they could have taken some profits.
Interesting.
Like you said, the FSD revenues, the FSD price has gone up, but they could have had some FSD deferred revenue released as well.
With the Bitcoin stuff, it's a little bit of a wild card for sure. But correct me if I'm wrong. I think last time they even bought Bitcoin, they knew during the earnings call that they now own Bitcoin, but it was never brought up once until I think the 10K came out. And then once the 10K came out, that's when everyone read through it and really, I think we got the earnings here. Tesla reports $2.50 non-GAAP. Consensus was $2.26. So here's the shareholder deck. Let's go through it. You can pull up on your end as well there if you want.
Yeah.
Feel free to. So Tesla trading kind of sporadically after hours, a little bit up, a little bit down. We'll find out. Oh, wow. Traffic on
I'm
this.
timing out. I think everyone's jumping onto it. I can't get in.
Oh, man. Let's go. I got 502 gateway. Hold on. I'm going to stick with the one that's loading here and refresh the other. Okay, come on.
No.
Failed to load. There we go. Of course. $2.55, $2.54. I just
$2.54.
$2.54.
Well, so I was $2.53.
Yeah, I guess you won Price is Right rules as well there. Nice work.
I don't know if anyone got closer than that. Okay, that's good. Okay, so that probably means that a lot of my means might be right.
And you were, I guess we'll find out here if this thing loads for any second now. Interesting. So that's a lot lower. So I guess they didn't take that tax credit after all.
Yeah, right.
The net tax credit. Let's see here. Tesla 910 after hours sporadic trading here on Tesla. Let me see if I can just pull up TradingView Tesla and see it live here.
After hours down 3%.
Down 3%. Let's see here. Pull this up.
The expectations were $1.99.
Mm-hmm. No, street expectations on non-GAAP. I think I read it was 226. 226.
Oh, right, sure.
226. I have to turn on after hours trading here. Forget about this for a second. I'm just trying to read this report. Have you got the report pulled up here?
Downloading now for me.
Okay.
Yes, I'm in.
Okay, you're in? Wow.
Yeah.
Got something in Canadians. What do you see there, Lee? You want to share your screen?
I can share my screen?
Yeah, go for it.
Okay.
Bear with us, folks. Appreciate you guys tuning in. All right. So after hours, by the way, $900 on Tesla. So
is that sharing? Did you get it?
No, not yet.
Okay.
But hit share on StreamYard and then it should pop.
I got it. Cool. Should be now. Okay. See it?
No, I don't see it yet.
Okay.
Let's see.
Oh, Chrome has to have permission.
Oh, okay. That's probably right.
Is it still not loading for you?
No, still not loading. Okay. It's all good.
All right. Okay. All right. We got 2.6 billion GAAP operating income, 14.7% operating margin, 2.3 billion GAAP net income, 2.9 billion non-GAAP net income, 30.6% GAAP automotive gross margin, 29.2% excluding credits. And credits were 314. So automotive revenue was 16 billion. Automotive gross profit was 4.88. But yeah, margin 30.6. So about the same as last quarter. Total revenue 17.7.
I'm just going to read their summary here that they have. Tesla 2021 was a breakout year for Tesla. There should no longer be doubt about the viability and profitability of EVs. With our deliveries up 87% in 2021, we achieved the highest quarterly operating margin among all volume OEMs based on the latest available data, demonstrating that EVs can be more profitable than combustion engine vehicles. Additionally, we generated 5.5 billion of GAAP net income and 5 billion of free cash flow in 2021, huge, after spending 6.5 to build out new factories and other CapEx. After a successful year, our focus shifts to the future. We aim to increase our production as quickly as we can, not only through ramping production at Austin and Berlin, but also maximizing output from our established factories in Fremont and Shanghai. We believe competitiveness in the EV market will be determined by the ability to add capacity across the supply chain and ramp production. FSD software remains one of our primary areas of focus. Over time, our software-related profits should accelerate overall profitability, right? More importantly, FSD is a key component to improve automobile safety, as well as further accelerating the transition to sustainable energy. While 2021 was a defining year for our company, we believe we are just at the very early stages of our journey. Thank you for being a part of it. Good summary there. Overall, first impressions, Lee, first thoughts?
It's good. It's good. Yeah. I mean, the margins I was hoping a little bit higher, but you know, there could have been some other issues there. But yeah. So I mean, the revenue is higher than I expected, so that's good. I guess that would mean that they have a higher ASP. So right. So because a lot of people thought the ASP would be down due to these Chinese sales. as the Chinese cars are cheaper, especially the standard ranges.
Interesting. And they also got a $340 million payroll tax from Elon's options exercision from increase in SG&A from that. Interesting. So that's a good chunk of change as well right there.
Right.
So they ended production at 305. So yeah, production delivery numbers stay relatively the same amount. Solar deployed in megawatt hour or storage deployed in megawatt hours about 1,000. So really nothing too much happening in the energy level at the moment. I want to read if there's anything about 4680s. So they have to talk about Berlin. Equipment testing through the vehicle production process started late in 2021 for Berlin. This is, we are still in the process of finalizing the manufacturing permit from authorities, which will allow us to start delivering German-made vehicles in Europe. These first vehicles will be built using 2170s. Okay.
Right, which is kind of what we expected.
Yeah, which is what we expected. They don't talk about 4680s even in the Austin section that I see here. That's interesting. So if you notice this, they say after final certification of Austin made a Model Ys, we start to begin deliveries to customers. But they don't say 4680s in this section, whereas in Berlin, they explicitly call out 2170s.
Yeah. I think they're going to be using 4680s from the get-go with Texas, from Cato Road, the facility there, most likely. I mean, they must have built up quite a bit by now. And we've seen them getting the 4680 line up and running in Texas, or starting to. So I assume that would probably be up in time for when they need to ramp up the actual production line. I'm hoping that's how it's going to play out anyway.
Yeah, interesting. But I do find it interesting that they don't call out 4680 South as being the first cars out of Austin. Like, they explicitly say 2170s are going to be used in the first made in Berlin, but they don't say 4680s, which almost confirms, does it not, a little bit, that they're going to be using 4680s? Because if they're going to be using 2170s, they would just say that, like they did in Berlin.
Yeah. I think they've always planned on using 4680s there. That's my thought. So I'm hoping that you're right, and that is just what we can infer, that they will be doing that.
Yeah.
And what, we're at 10 gigawatt hour run rate or something in Cato Road. So they're going to need a lot more eventually, pretty soon. Probably maybe sometime in the second quarter they'll need to increase that rate. So hopefully the production line for the 4680s are up and running then, and that's going to be critical. I mean, when we can see how quickly they can bring up these production lines for the 4680 and what run rate they're at, then we can really start to put together some projections on how fast these new factories can really ramp up.
Absolutely. Speaking of ramping up, check out this cumulative profitability since inception chart for net income for Tesla in the last how many years, and then you look at 2021, massive. And it's just, the story is just beginning, right? Huge, interesting. So
yeah, it is just beginning.
So not a huge blowout. I think a lot of people had 32, 33, 34% gross margin. So, and not one of those, closer to last quarter, which is still, I mean, the bar has been set high a little bit. Still a very good earnings, very good in terms of delivery count, which I guess matters for the most part here.
This revenue, auto revenue is really high. I mean, I think we're at ASP of like 51,700 here, and we're at like, I think 49,000 or something. Was it 50,000 last quarter? Was it? I think that the ASP must be up.
Was it 15,967 over 308? $51,850 ASP, it looks like, from my rough calculation. So it's a little bit up. I mean, that's probably due to the price hikes that we had in middle to the fall. And this is only going to continue as we move forward.
Yeah, more Model S and X sales as well, of course.
More Model, yeah, and that's going to be a big component of this year as we move forward. Interesting. Anything else stick out to you here in the earnings in the shareholder deck? I mean, what's massive is $11 billion in adjusted EBITDA. right?
Yeah.
$5.5 billion in net income GAAP, 7.6 non-GAAP. Interesting. Wow. Well, I mean, oh, sorry. This is for the year, of course. I should probably say that. $11 billion adjusted EBITDA for the year, 5.8 billion for the entire year of 2020. So huge. So as we extrapolate this, so $2.50, let's say $2.54, let's just say 250, annualizing that, this is of course what Wall Street's going to do. We get to about 10, maybe 10 and change. Right now, I think the street's at 960, 970, something like that. So we probably aren't going to see a dramatic upping in annual EPS forecast. So if you put let's say 100 PE on the $10 annualized, that's about $1,000 a share if PEs come back to kind of that 100 range that we've been seeing last year.
Yeah.
So interesting. So I'm just trying to dig through what the possible scenarios could be of what Elon could talk about to potentially move the stock up. Because as we sit here, we are sitting at $907 per share after hours. There we go. We are moving back up, though, mind you. Down only 3% at this point.
How many now?
Down 3% after hours to 910.
Okay.
Yeah.
Right. Well, remember, Microsoft was down 5% after their report, and then up 3%.
Yeah. No, this is the earnings report. I guess just preliminarily looks at it. It wasn't a blowout in terms of gross margin or operating margin, but it was a steady and healthy reiteration of what we saw last quarter from Tesla, even at higher volume levels for the quarter, which I think is great. But 4680s, of course, are going to be the next leg of the story as we move forward here. Lee, by the way, I think we're about to go green maybe here. We're only down 2% after hours. Who knows? This could pull a Microsoft on us.
Yeah, I hope so.
Interesting.
So, I think that will give us just a rough numbers. I think that give us a 170 at the current stock price where it closed. I think it would give us a trailing 12-month PE ratio of 170.
Trailing 12, okay.
I mean, we're going from 304 to 170.
Oh, right. Oh, well, that's again, that's massive.
Yeah. I'm not sure you can have Tesla at a trailing 12-month 170 PE ratio, right? That seems low.
I think
I would expect it to be over 200 at least.
And so if it's over 200, what does that put us in terms of price?
That would be another
rough ballpark here.
So that's going to be that would be like a 15% increase or something. Yeah.
50% increase. Okay. Well, 15. I think the good news here is that revenue was beat pretty massively. We got CNBC. Do you want to watch this with me here, Lee?
Yeah,
let's do it.
And how they use auto and the capacity from the 4680, which you'll see in Texas, to get into the energy storage market and to ramp that, which is basically non-existent in most estimates. But I think that's where you're going to see the narrative start to shift to talk about more of an energy story in 22 and less of the comp as an auto company.
Jed, Laura, thanks for joining us. Good to see you.
Thank you.
Tesla off the session lows, not the session lows, the after hours lows are now only down 2%. The Dow and S&P closing in the red. The Nasdaq just barely positive. This comes on the back of Fed Chair Powell hinting interest rate hikes could be coming as soon as March. It will be the first increase since December 2018. Joining us now, Mohamed El-Erian, Allianz Chief Economic.
All right, this guy's good, but we want to talk Tesla right now. Oh, sorry. Interesting. Okay, so I mean, 30+% gross margin for the second consecutive quarter with deliveries up as much as they were is still massive. You know, and I think maybe the reservation we're seeing with the stock price at the current moment is kind of the wild card of having Elon on the call. Whenever you have Elon on the call, anything can kind of happen. So maybe we're seeing some reservation of buying.
I mean, how could it not be good news if Elon's there, right? I mean,
I think it's the unpredictability of having Elon on if you're an institutional investor, maybe.
So, I mean, the roadmap, though, that he's talking about, this is what's going to be interesting, and just seeing how the company's going to, the expectations we want really will look at for the 4680 expectations of what they expect to get to. I mean, I think we heard was to be at a run rate of 100 gigawatt hours by the end of this year. I believe that was the last guidance we got before 4680 ramping. So we get an update on that. And obviously, maybe a compact update would be great. I mean, people love hearing about that. And a Cybertruck update, of course. Future factory expansions. Maybe they'll talk about what they're going to do with Berlin next. And maybe some of what's happening in Shanghai, they might tell us, or the CATL deal. I mean, yeah, but what of course I like hearing about would be what they plan on doing with the LFP as well. Now that hopefully, I'm thinking that it's going to be a battery day 2.0 or something, where they'll announce how LFP is going to work and the chemistry they're going to use for that and what size the battery will be, etc., and get more information on that and when they plan on ramping that up. And I believe that's what's holding back the compact, and I believe that's what's holding back the energy.
Do you think, I asked Dave Lee this as well, do you think they're going to wait until Cybertruck starts delivering before they announce the compact? Just optically speaking, having another product in the back, taking pre-orders on just looks a little bit bad. Whereas if you have the Roadster and the Cybertruck, and Roadster's not coming probably anytime soon, let's say, but Cybertruck is, just having that first come out and then come out with another car.
Yeah. I don't know. They could, but I mean, Cybertruck is just going to take, it's just so much energy going into that car. Everyone just cares about that so much. It's just such a big deal. It's just going to steal the limelight anyway. It's like the fact it will be done is a big enough deal that people will start ordering them and they'll receive them and we'll see them on the roads, that they managed to pull off this incredible engineering feat, people can have these just outrageous cars to drive around in. So yeah, but the compact, they've got so much time to design this car because they don't have the batteries. They don't have close to the batteries to meet the demand that this car will get, right? So there's got plenty of time to design it, refine it, make sure it's designed around the manufacturing process, that they can just pump these cars out so quick. I mean, we've seen how fast they're doing the Model Ys now in Shanghai, rumored to be as quick as 33 seconds coming out of the factory. That's so fast. So imagine after all that experience and knowledge they have and spending years refining one car that happens to be smaller, of course, than the Model Y. I think that extra time they're going to get, they're going to use it. But I think that they'll give us a reveal, and like they did with the Cybertruck, we'll get a reveal, and then eventually, maybe a year or so after that, we might see it in production. But they'll do the reveal, and then they get the feedback from all their consumers as well, and all the fans, and other ideas that come in, and they'll use that perhaps. So I think I'm hoping we do get a reveal later this year of the compact, possibly towards the end of it.
Towards the end of the year. What someone's asking here, I'll pull it up. Anth is asking, love to get Lee's opinion on the effect of interest rates on Tesla and the stock. Despite Tesla having very debt, will it affect the demand? Let's just talk macro, even interest rate wise. What are your thoughts on kind of what's happening with that? Yeah,
well, I mean, rising rates obviously does affect demand because money is more expensive in that sense. But will it affect Tesla is a different deal because you have a growing industry at the same time, the EV industry, which is expanding. Now, if interest rates go up, then demand overall for cars will probably reduce and people will spend less on cars and the average price they spend on cars will reduce. But so this is like one big circle of the actual automotive industry, but then you've got a smaller circle inside, just EVs, which is also growing and expanding inside the circle. So the demand for that is also growing. So it should balance it. It could balance it out, basically. It might not affect it as badly as others.
Yeah.
Well, it shouldn't affect it as bad as others anyway, but it might not affect the prices. It might. But if it is bad in a recession, I don't know if they need to reduce prices much. They could just release lower cost versions, like a standard range Model Y.
Yeah, I don't think interest rates really are going to have a huge effect on Tesla demand for cars with the amount of backlog that they have, 6 to 8 months waiting in some areas for cars. Yeah, I don't think so either. What about the compression? pardon me, of the multiples happening in tech that we've been seeing for the last couple of weeks here. Of course, the Fed was talking today, and it looks like we're probably going to get a rate hike in March, likely 25 basis points. Do you have a thought or a thesis on how macro might shape up in the next couple of months?
Yeah. I mean, I think basically the market will readjust PE ratios. They are really high anyway. They're historically high. So I think people will just have a different outlook, and the average PE ratio will just somewhat reduce. And that's how it will be viewed, really, just in a macro sense. But at the same time, I've done projections where Tesla's net profit increases like tenfold in two or 3 years, which is more powerful than the macro.
Absolutely. Right. Kind of the cream of the crop has to rise, and Tesla will increase the earnings power as they go through. By the way, how long do you have with us here, Lee? I don't want to keep you too long if you don't have to say.
I'm good for a while. Yeah, I'm good.
Okay. Just checking.
Yeah,
I didn't want
my
you
wife had the kids out, so I'm free today.
I love it. Okay. Sanju's asking thoughts on the Moody's re-rating that we saw, the investment, or not the investment, the almost investment grade credit that Tesla, I think it's a BA1 now.
Yeah, right. We're getting there. It didn't seem to have much impact, but I mean, what does right now? It's just too hard. Nothing's affecting it at the moment, really. It's just everything's all over the place. But once it does get that higher rating, then obviously that will be a mover as well. And I mean, there's various things that are going to move the stock, like probably $100 or something. I would have thought if Austin opens, for example, or Berlin opens, or we see 4680 specifications. There were just so many events, and they're still coming up, which is why I've got options up to April to cover some of these events. And I got leaps as well, so I'm not worried about my leaps. They're only down 20% or something, but one of my options was, last I checked, was probably down even more. It was down 90%. But my leaps, I've got 2 years for some of them to still for Tesla to sort this out. It's a long time, and so much can happen. Like, I think more and more people are realizing we are just really at the beginning, and the amount of batteries that Tesla have right now, I estimated it was something like 70 gigawatt hours they probably had around last year, right? And we're looking for 3,000 gigawatt hours just in-house sometime this year. To put it in perspective, it's all about batteries. You can basically assign, I don't know, so like $200 or $300 net profit per kilowatt hour Tesla can produce, or Tesla can achieve, can land, from their suppliers or in-house. And the more batteries they have, then you multiply it by that.
Absolutely. It's entirely a battery game, almost entirely. And whenever you see announcements, whenever I see, Ford talking about the billions of dollars that they're going to invest, or GM, you have to ask yourself, first of all, are they actually going to invest that? But number two, where are they going to find the kind of the raw material, the actual supplies for the battery? And then, okay, let's assume that they got that. Now, how are they, like, with no amount of scale, how are they going to now figure out how to manufacture these batteries at a cost benefit for them when they haven't? So it's an uphill battle for sure. Tesla's kind of is in charge.
And we're talking like 30, 50 billion dollars some of them plan on borrowing. I mean, where's that money going to come from, especially if it's a down economy, right? That is so much money, plus the interest they have to pay on that. And it's just like they're afraid that, they haven't spent that much money yet. They just say they will, or claim they will, and it might just be, for the shareholders, but to show that they are serious about EVs. But like you say, they're building these fabs, and then they still got to supply all the nickel and the lithium, and also they're still using cobalt as well, which is not a commodity you really want to have to deal with.
Yeah, a lot of backlash on the use of cobalt as well. What's fun? I just did a quick search here on the shareholder letter, and I only found 4680s mentioned one time. Really, in the letter. It was, we believe our current projects, including large casting, structural battery pack, and 4680s, among many others, should help us continue to minimize our product cost. Other than this, 4680s was not mentioned that I can see, other than that this one time. So I don't think we're probably going to get too much out of Tesla, considering that they haven't written much in their report around it. They're probably going to be a little bit tight-lipped around that.
Or they're saving it for the call, maybe.
Maybe that's wishful thinking as well. Yeah, I mean, potentially. I guess we'll find out. Also, one quick piece of math I was doing here. If there's $340-ish million of Elon expense, that's about, where's my calculator here that I pulled up? Where did I calculate? It's about 30, or let's say 30 cents, 25 to 30 cents lower non-GAAP EPS. So that puts us, let's say if we add that back in, 260, 270, maybe around there. I have to run the real calculation. So that's if you weren't looking at the CEO stock compensation expense there, we might be a lot higher than 256 or 254 as reported.
Right. Yeah.
But you came 1 cent within the non-GAAP estimate. That's amazing.
All right. Yeah. So I that was my GAAP estimate. My non-GAAP was 270. Sorry.
Okay. Gotcha.
Yeah.
Hey, let's take it. I guess yeah. By the way,
I guess
oh, sorry. Go ahead, Lee.
Well, I mean, it must have just come from the margins, though, because I mean, they had higher revenue than I expected, which was great.
Yeah, revenue growth was, what was revenue growth? 70% year-over-year revenue growth, or that was production growth. Hold on one second. 73% automotive revenue growth year-over-year.
Yeah, almost 16 billion in revenue. I only had them in at 15.5, so that's quite a bit high. But I guess the margin just wasn't quite as high as I hoped.
Yeah, margin was a little bit.
With the higher ASP, you would have expected higher margins. So yeah.
Well, I think a lot of that, I guess, maybe went to the stock comp, maybe inefficiencies with, I'm not sure how much, again, I don't know. I'm not an accountant, so I don't know, but how much of Austin or Berlin's expenses might have gotten tied up into this quarter, into quarter four. I don't know if that's even recognizable, but
if you recall in Q3, the margins were down a bit because of the Model S ramping. So the margins were 28.4 because they were ramping Model S. Maybe ramping Model X had something to do with it, perhaps. I'm not sure. But you think with a higher, I mean, that's a higher ASP. So you think, like we said, it's probably most likely due to the price increases, which also we haven't really felt those properly yet either, and not until next quarter because of the waiting list. There was the 6-month delay on the orders from when the price increases. So that will be felt more next quarter. But next quarter is going to be a bit of a mess with these new factories if they're in operation as well. So it's going to be tough to calculate. It's going to get way harder to calculate these estimates when these new factories are going.
Oh, absolutely. They actually cite rising raw material costs, of course, commodity and logistics, and there's no way for us to intertangle or to, I guess, intertwine how much of the price increases offset the cost versus if there's any margin baked into that. I mean, in theory, I guess all of the price increase looks like close to it has, if you just look at it from kind of one-to-one perspective, got into the rising cost of material here. But SG&A line, for that $340 million payroll tax, that is quite big as well for their operating margin. So $4.6 billion, or sorry, $7 billion of operating expenses this year. If you look at this quarter, operating expenses went to $2.2 billion this quarter. So substantially higher. Substantially higher.
That is high. Okay, where did that come from? Oh my gosh, R&D.
Yeah.
Wow. Oh my gosh, that's huge. That's a massive amount on R&D. All right.
I'm trying to find the line item. Hold on one second.
Sorry. Hang on. Oh, sorry, the wrong line. Okay, so the R&D's increased quite a lot. Yeah, R&D's at 740 now. That's quite a jump. But it was SG&A that jumped, not R&D. Sorry, SG&A went from 1 billion to 1.5 almost. Yeah. So yeah, like that. So that's a big jump.
Let me just try to find it here. Oh yeah, there it is. Okay. So yeah, R&D is I guess pretty stable, 500 to 600-ish million. But yeah, it's the SG&A line. Well, actually, no, pardon me, 740 on R&D as well. Yeah, so
that's a bit of a jump.
Yeah, that is. But again, SG&A is the big one here. And I wonder if Elon saw this coming with, remember when he sent that internal email out saying, hey, folks, like, keep it a little bit, don't expedite shipping or, keep costs a little bit lower. I wonder how much of that played into still keeping this, I guess, relatively lower than how high it could have been.
Yeah. That is high SG&A. So I didn't have that factored in. That's where I lost a bit as well. So yeah. But the R&D increasing, and hopefully that's some more LFP research and development. Be good.
Yeah, maybe that's probably 4680 related, I guess.
Yeah, that too, probably.
Yeah. By the way, for everyone asking, yes, we're going to be streaming the earnings call as it comes out, but we got a little bit less than an hour until then. Hit like, be sure to subscribe in the meantime. See here, SG&A is going going up, is all about people, services, business, and pre-production hiring. Potentially, just don't know how much of that, again, is recognizable in the SG&A line. I think of the VAT, what's the chasm here? 994, let's call it 1 billion Q3, 1.5 this year, so $500 million. I mean, 70% of that is just related to Elon's payroll tax. So, yeah, I mean, you could have a couple $100 million increase from Austin, Berlin, but not entirely sure. I see a question here. Any word on Giga Texas opening? If I recall, so Lee, correct me if I'm wrong. I think when Giga Texas was announced, we heard that on the earnings call, but it was also put into their shareholders deck when that came out. So it wasn't a surprise by the time that earnings call happened that we actually knew about it. So I think if Giga Texas was online, we probably would have seen it in this report already. What do you think?
What if like it's officially opened during this call?
In like the 1 hour between when it comes out?
I officially open Giga Texas now, and he cuts the ribbon.
Bradford from Halter Ferguson Financial saying increase in SG&A driven mainly by payroll tax. Yes, exactly. Thank you for the super chat, by the way, Bradford. Yeah.
Right.
So
right.
I'm also curious how, I don't follow the stock comp or Elon's compensation expenses very closely. Did anyone, to your knowledge, any analyst anticipate this expense coming, or is this kind of a wild card expense?
I didn't anticipate it. I didn't hear about it either. So yeah, it was a wild card for me anyway.
Yeah, and also the tax. I think the net operating losses that was trailing in terms of the tax credit, that also did not get recognized, where I think a lot of people did assume they assumed that it would be. So interesting to see that they didn't do that as well. Still would say decent earnings report from Tesla. It wasn't a blockbuster, but revenue growth is great to see year over year.
There were good numbers in there, yeah. And we even had regulatory credits up to 314 again. I thought they were going to be down.
Oh yeah, interesting. I mean, that's got to teeter out soon enough, right? Do you anticipate those coming to zero eventually?
Still going, isn't it? So, I mean, eventually, we lost Stellantis or Fiat Chrysler, and it's still going.
Yeah. Did they ever sign a new deal with Fiat Chrysler on that?
I think the merger with Stellantis meant that the cars that they did have enough compliance cars, or they had fewer enough compliance cars that they had to pay less credits, or they don't have to pay the credits anymore. Basically, yeah. That I think that was part of the point of the merge, really.
Yeah. Gotcha. Okay. Yeah, it's funny. It's, this whole industry, and it's funny how ridiculed Tesla does get for these credits, where it's really the legacy autos that should be ridiculed for having to pay Tesla to even, to meet their obligations. Like that's really where it should be. But yeah.
Yeah, it's funny though, right? How Fiat Chrysler paid for the factories to get built.
Yeah, and no kidding. Interesting. So it's going to be an interesting call here from Elon. We don't really get very many hints of anything massive coming from Austin and Berlin here. So, interesting.
I mean, I'm interested in China as well. Seeing these run rates, like I was saying, 33 seconds a car out of the factory. When you scale it up, it's not far off 1 million a year from that one factory. That's just the Model Y factory.
Yep.
Now, I assume they could probably do something for the Model 3 factory too. But again, it's all battery constraint. So my thoughts are that it's no coincidence that the CATL facility, like 3 blocks from Giga Shanghai, now has 80 gigawatt hours of batteries, which is enough for probably about 1.3 million standard range Teslas a year. And they're at a run rate of perhaps 1 million a year just for the Model Y, and you add Model 3, then that is pretty exciting. That's enough batteries just from that factory for 1.3 million plus whatever else they have, LG, etc. I mean, it's big numbers.
That is huge. And
that
and they're building that new section to Giga Shanghai as well, right? What do they call it? Phase 3? Is what they call it?
Yeah, the phase 3, yeah. And it just looks like a huge expansion to probably compensate for these extra batteries they're going to be getting soon. And supposedly they're already getting 60 gigawatt hour run rate already from the new CATL factory. I think it was just an existing factory they bought and then redid, you know, put the production line in there. But I mean, that is so quick to get those battery production lines up. And I'm wondering, is it because it's LFP? Is LFP just going to be that much easier to produce? Is Tesla's 4680 lines just that complex? They're going to take that much longer to get up and running and ramp up? Or is it that the production line that 4680 use are just so complex that it does take that long? And the fact that CATL use prismatic makes it a lot easier and they can do it quicker. But China's just going to kill this year, in my opinion.
Yeah, China's going to be a big, I think gross margin from China has to be, say, over 35%. Like,
it's got to be good, right? I mean, especially on the Model Ys, we're using the front, the rear die cast, and obviously it's a custom built facility compared to Fremont. So yeah, it's got to be upwards 35, even on those standard range versions, because those batteries, I don't know what Tesla are paying, but I think it's got to be below $100 a kilowatt hour now. And with this new factory, I'm hoping like $90, $80 perhaps they could be paying.
Wow, that's crazy.
Which is a big difference, you know, like when they were using the nickel based ones, it was probably about $150 from Panasonic. I don't know what LG were charging, but that's a big difference. You know, it's a huge saving.
That is huge. Absolutely. Interesting.
And of course,
go ahead.
Well, basically, the more volume production they get from this factory, the OPEX is going to remain pretty constant as well. You know, it's still the same building, it's the same operating expenses, so the margin improves again and again. And when you're at, 80,000 a month, sorry, that's kind of what the run rate we've seen potentially. That is massive. You know, Elon said volume production is about 20,000 units a month. That's quadrupled volume production from one line.
Yeah, no kidding. It's operating. I think this is really the key of Tesla is how low their OPEX can stay, and really drive the. You talk about EV manufacturers; they're having a hard time even doing it at a break even. With a lot of their EVs, and there's of course smaller scale, so you don't have economies of scale with a lot of this sort of stuff as Tesla does. I just don't see Mary at Ford and GM and Mary Barra and Jim Farley were going to meet Biden today at the White House to talk about EVs and everything going on there. It just seems like a lot of this is just for show and just like you said, compliance cars. And I really wish I'm wrong and really like they really put the pedal on the metal. I just have a hard time seeing that they're going to want to kill one side of their business, right? Like we talk about.
The objective is to maintain stock price, right, and keep the shareholders happy. So they put on these elaborate dog and pony shows of these cars that they've designed, and because they're in such low production, they don't need to be designed too efficiently, so they can still look somewhat prototypey, kind of cool looking. And then they make all these cool lights because you can condition battery and electricity with lights. So they put on more lights and make them look. I mean, I went and test drove the BMW iX the other day, and they did a good job. They're making these cars look pretty good, but when you get down to what matters, the range and the price for the range and how many batteries they're using, then it's just all moot, really. They just aren't coming close at all. but they're just putting on these shows basically. And obviously they're losing money on these cars too. Although it does help obviously be subsidized with the compliance issue with the regulatory credits. But I think it's just for shareholders mainly to show, look, we can do it too. Tesla did it, but it's not hard. Look, we've been making cars a lot longer than them. We can do them. So, don't sell your shares yet.
Yeah. And did you see that article? By the way, we just turned green after hours here, folks. So hit the like for that. Yeah, we just well, we're pretty much just flat if you want to call it that for now, but good momentum.
I'll take
did you see that article from CNBC? Them saying that, was it Ford or GM's going to surpass Tesla in the EV race by 2025 when they produce 1 million cars? Did you see that? Kind of blatant.
Yeah. I think I saw the headline somewhere. Yeah.
Just you can't even make this stuff up. I don't. And again, I saw an amazing comment here from Vasil. Let me see if I can pull it up. He says, "I work for General Motors. I don't want to lose my job. Can we root for all companies to succeed?" Absolutely, and I think we're both pretty much on the same side here, where we want to see legacy auto transition to EVs faster, and I think it's not a zero sum game here, right? Like 1 + 1 = 3 in this game. Just have a heart. Like you say, it sounds more of a show. It's more of a show and tell when they're talking about this sort of stuff than actually acting on a lot of the stuff that needs to be done. So,
I mean, they need two things. They need to hit volume production, which appears to be very difficult for everyone, because then you get your OPEX down, right? OPEX per vehicle becomes feasible suddenly, and you go from breaking even in net profit. And then also the other side is they need the battery costs to come down significantly. I think Legacy are paying something like $250 a kilowatt hour, and they're hoping to get to $100 a kilowatt hour by building these own fabs with LG or whoever they're building them with. And then at $100 a kilowatt hour, they can potentially maybe make a profit, especially if they can hit volume production. Maybe they can. And you start doing the numbers, and and obviously I think they need to raise their prices too. But if they can pull off like $5,000 profit per vehicle and you do $1 million a year, then the numbers do get big.
Yeah.
I mean, as Tesla's already demonstrated, but they need to get their costs down, and they probably need to raise their prices to do it. And it's not just Legacy. I mean, the Chinese autos like XPeng, they're still making losses too, even NIO.
Yeah. I saw a comment here. By the way, Bradford, I'm eating some juju now here. I don't think Lee has any oranges next to him, but let's start to get the stock price going up here. 942 after hours. Hey, we're up $5 now. This is good.
So it's just like the Microsoft then. It just, went down and it's going to come back up. Probably. I think there's going to be some more confidence coming up.
Absolutely. And on the topic of NIO for a hot second, I saw a comment about what happens to NIO when they enter the US market. I think they're entering Europe first. I don't think they have just yet. I think Norway is probably one of the first countries they want to enter. I just don't know if there's going to be a reluctance to adopt Chinese EVs in North America in the same way that you kind of see a lot of people are reluctant to like buy Huawei phones, for example. The inverse works often quite well. American brands do so well in China. But when you talk about Chinese brands coming into North America, some do really well, but sometimes they have that kind of brand, not that brand appeal, so to speak. Are you bullish on Chinese EV? Because they are really, other than Tesla, they are the top dogs in the EV space. Are you bullish on them entering North America?
I'm not bullish on North America, no. I think it's going to be too tough for them. Like they're losing enough money already, right? Then you go and compete with Tesla on their home turf. That's got to be tough. Plus, America is the toughest market in the world to enter, especially when you're not from there. They've got obviously shipping costs. They've got tariffs to pay. They don't have a charging structure, a charging network set up as much as Tesla. You got servicing. It's got to be tough. I would have thought perhaps they would maybe start in California, state by state, and slowly spread out from there. If I was going to do that, but I think there's just easier markets right now, and they're limited anyway. It's not like they've got many cars to sell. So I would go for probably Norway. I'd go for Australia. I'd probably go for New Zealand as well, and Asia, obviously, because you go to the EU, you go to UK, you go to US, you go to Japan, then you're going to be facing protectionism because they've got their own local car markets that they're going to protect.
Yep.
And then suddenly you've got an extra 20% you've got to add on, and you've got an extra 20% tariff on something when you're trying to undercut Tesla that doesn't have this tariff because they're making them in all these markets, it becomes so tough. And then probably want to make some profit somewhere too. And they're making their cars, well, Tesla can build their cars at a lower cost than they can. It just makes it really tough. And then the idea of the Chinese cars are to undercut Tesla anyway. So you're making your car more expensive. You're trying to sell it for lower cost. You have tariffs. You have shipping costs. You don't have the infrastructure. You don't have the support. You're going to probably have to spend some money on advertising. It's not something I would look into for now. For me, I wouldn't. If I was them, it would be tough. It looks tough. Plus, Tesla's there already, and then soon enough, Tesla's going to have this compact model, which will be lower cost than them anyway.
Absolutely. Interesting. Sean, thank you for the super chat here. I personally want to see Tesla focus on home and commercial storage, aka energy arbitrage, then Model 2. What do you guys think? Sean says.
Yeah, I think basically it's all going to be down to Tesla's in-house LFP for both energy and this Model 2 compact as well. That's the way I see it, because I think like Elon's saying that the Model Y is going to be the best-selling car in the world, implying maybe over 2 million units, maybe even 3 million units a year. So the Model Y, maybe it will be an average price of maybe it will start at 45,000 when there's a standard range, because I think there has to be a standard range version in all markets to do that. So what happens when you have a $25,000 Tesla, right? Or maybe adjusted for inflation, it's 30,000 now, whatever. If the demand for a $45,000 to $60,000 version is 2-3 million a year, what's going to happen when it's 25,000, 30,000? It's got to be obviously north of 5 million somewhere, right?
Yeah.
Maybe 10 million. There could be that much demand. And remember, this is a $25,000 car that doesn't need fuel. The running cost is going to be negligible. So it's not really like cost of ownership is even lower over 5 years or so relative to any other car. So like the demand is just it's just going to be phenomenal. That means they need a lot of batteries, a lot of batteries. So they're going to have to do their own in-house LFP, and that's what I think. That's what's going to be for the home energy is what we need is LFP batteries as well, because a Powerwall, they are really expensive still, and I think they could come down price in half perhaps when they get these in-house LFP batteries running, and maybe even a lot cheaper eventually in time as well. And I think, and obviously the picture really, to start with, Tesla's going to have this battery business. It's the core base. It's just getting as many batteries as they can from anywhere, making them themselves from any suppliers they can. And that's going to be their core business for now. And then eventually, and it's going to be hugely profitable, great margins, but the real profit is going to come from the software, right? From FSD and potentially robotaxis, and then AutoBidder for the energy and storage system. That's where the real profit's going to come. So eventually they might just want to get everyone to have as many batteries in their house as they can, and have a low cost way for people to do that. And then they make their money on the AutoBidder, right?
Yep. It's Oh, go ahead.
Okay. And with the compact as well, right? So they may even be selling these with a small margin, but like Elon did say that they might not even come with a steering wheel or pedals, implying it's full self-driving, which would also imply you have to pay for self-driving, which might be $200, $300 a month. So they may only have 20% margin on this low-cost car, but they're making $300 a month on every single one because you are forced to buy FSD for it. And when you add that up over the lifetime of the car, maybe 30 years or so, you're looking at $100,000 pure profit pretty much.
Absolutely. No, everything surrounds around cars and auto. You're right. And that's where the highest marginal utility is. Agreed. Essing, thank you for the super chat. Appreciate that. She likes your channel a lot. Robin as well. Thank you for the super chat. Peter has got a question. Do you know where I can watch Elon's speech? Yes, we'll be streaming it here, Peter. So stay loaded. On insurance, how much do you talk about insurance a lot in your thesis?
I've gone through insurance a bit,
yeah. And we talk about demand levers that Tesla can pull. I'm personally in the boat where insurance, if Tesla can run it just at a net break even, where they can use it as a demand lever once they get to the higher volume amount of cars that they want, like just to incentivize people, like, hey, if you buy a Tesla, not only is it one of the best EVs out there, it's the best EV out there, but on top of that, you're eligible for Tesla insurance. And Tesla insurance has all these perks. And by the way, it's like half of the cost of your normal insurance, because Tesla has all the data of your driving, for better or for worse, and they can and they can really risk adjust for that and charge you exactly what you should be charged for. And so you talk about demand levers, 10 million to 15 to 20 million units. Advertising is one, for sure. You can start advertising at that point if demand is starting to be an issue. But I kind of see insurance as kind of a loss leader, or do you see it more of a gross profit or a cash flow generator for them?
Yeah, well, it's like you say, you get charged accordingly for how you drive and how risky a driver you are. So currently, insurance companies have no idea how good a driver you are or whatever. I mean, they might ask how many speeding fines you've had, but they don't know for sure. Whereas this data, well, it's called asymmetric information, right? So we all have to pay higher premiums because there are people who drive worse than us. Even if we're good drivers, we have to pay more because of these people. And this asymmetric information means that that's the reason. But the Tesla can understand how good a driver you are and removes that, and they know specifically your risk, and they can work out, there's like a 99.8% chance this driver is going to have a crash in next year or something, whatever, and therefore your premium should cost this much. And yes, like you say, it might cut your premiums in half, so you might save, I don't know, $500 a year, but also, so that would mean that Tesla are also receiving half as much as a traditional insurance company. So like you're saying, there's going to be smaller revenue there per vehicle. So it's tougher to make more profits. But that asymmetric information that they've removed means that their drivers are obviously, they're paying accordingly. So there's that buffer. And like, I think the fact that it removes a cost of maybe $500 a year for your car. So therefore the demand for it would also increase, like you're saying, right? It's removing a certain cost. And then again, it's also Tesla, which means hopefully the whole insurance system will be run a lot more efficient on top of that.
Yeah.
And eventually there'll be enough cars and economies of scale will come in more. But I don't see it as a big moneymaker, to be honest.
Yeah.
I think it will help demand, but I think the main reason for it is who else is going to insure robotaxis?
They're the only ones that probably would underwrite on that, right?
Yeah, right. So who is going to insure these cars that drive around themselves all day long? It doesn't. It's too risky. I think that is possibly the main reason Tesla need their own insurance.
And I also think it's important. Sorry to cut you off there. It's important to realize that any profit that Tesla can make off insurance, sure, they can print money with their insurance, 100%. They can charge. I think if you ask a Tesla owner and they were offered Tesla insurance at the same cost as their other insurance, they'd have no problem switching over. So you'd have kind of sticky product there. But there's a degree of, if you can get your insurance to the bottom barrel level of costs where you're not making any money on purpose and you're only charging with the amount of payouts that you expect for that year based on risk adjustment, then what you have is all of a sudden you're sacrificing those short-term profits to increase demand of your product. Because if you're only like, I pay $250 a month for my insurance all in, and if I can pay, it's nuts. And if I can pay,
I do as well though.
Is it 200 something for you too?
$3,500 a year, New Zealand dollars, but yeah.
Yeah. Well, mine's Canadian dollars. But if you can get to the point where it's like, okay, Tesla knows that my risk level break even is $100 a month, 100. So if they charge up $200, great. I'll probably still buy it and they'll make that money. But there's a degree of, if you can pull the demand levers here a little bit to bring that insurance cost to a loss leader level and only charge 100. If they wanted to, then they could push that as an immediate demand lever from 10 to 15 million units. Should they, and this is what the caveat, should they see demand being an issue once they get to the 15, 20 million, car level, let's say that they want to get to. So I think it's important to realize that they have that in their back pocket should they need it.
Yeah, I mean, particularly with the lower priced compact as well. I mean, that will make a big difference for a lot of people, saving $500 a year or whatever it is. But the thing is, they also, because it's vertically integrated, they're not going to be ripped off by some car workshop who is just going to add extra money just because they know it's an insurance claim or whatever, or they're not going to have to pay for parts from it. It's all vertically integrated. They can repair the car themselves with their own parts and everything. So it's going to cost a lot less for an insurance payout than it would traditionally.
Yeah.
So you got to bear that in mind. Like at least on the repair of the Tesla, obviously there's the third-party car that might be involved in an incident as well.
I'm gonna have to. Yeah, I'm not sure who's doing. Do you know who's doing like the service aspect of Tesla insurance? That's going to be obviously a whole new business category that to get into, because what really matters with insurance is when you have a claim, how good is the customer service, how fast are they to reply, all this sort of stuff. I wonder if they're outsourcing that, or if how their plans are. Because again, it's a whole new business that they have to open. It's not an easy one. Insurance is not an easy business to be in. But the fact that we can even talk about it is pretty crazy. Tyler asking, what's quarter four annualized PE if you pull out Elon's comp? I think just rough math, it's probably close to 100. I would say, but I have to do the math.
What was the number? Was it 320 million?
340 million. 340 million was his expense. So billion shares, a little bit over outstanding, 30 cents a share, 270. So something like that, but maybe even less. Actually, I don't know. Michael's actually saying, just joined, didn't see any thumbnails on the Texas photo installing seats on structural pack, implies 4680s. Interesting. I'm going to pull that up.
I think it takes the PE ratio down to 100, 158, 159.
158 if you back that out?
Okay. So, yeah. Trading 12 months.
So I'm going to pull up, Michael's saying, look at the photos, and maybe Lee, we can look at the photos here. So this is Fremont, Berlin. Let's take a look at Texas. That's how crazy is the progress in Texas, by the way? It's just nuts how fast they were. General Assembly. Yeah, so attaching seats to the structural battery pack is what they labeled this one.
Yeah, that was cool, right?
Wow. Okay. And then semis. Did we ever hear from PepsiCo? Do you know if they got their deliveries yet?
I don't know if we heard they actually accepted them, but it was supposed to be. Was it 25 delivered this month?
30 delivered.
Is it 30? Yeah. Right. So yeah, I mean, I think this is probably just a one-off thing, right? Because I think it's just to like get them out and test them out perhaps as a product and see how that goes maybe.
Yeah.
Obviously they're not going serious yet with the semi truck.
They're not going serious with it, yeah.
Yeah, but I mean it's good to get it out, and get the customers using them. And you saw the charging rate was 1.5 megawatts they had at these new chargers.
Yeah, they just installed those, right? So
that's crazy fast.
Imagine plugging in your Model 3 to that.
And it'd take 2 minutes to charge.
Probably fry your battery though.
Yeah.
Interesting.
So we got the photo of the Texas paint shop as well. So we heard about the Berlin paint shop was some revolutionary new paint shop design and all this, but I mean, are we to assume that there is something similar at Texas as well? Because I don't know if much has been mentioned about that. And I think that is actually something that Tesla was lacking, is their quality of paint on the vehicles compared to what I was seeing in BMW and a lot of other cars at the moment. And I assume that Tesla are onto this. And what I saw at on the GigaFest, the one they had there with the new paintwork, it looked like it's up to that sort of quality now. And just seeing it at Tesla, any update on a Tesla, just even if it's already on other cars, it just looks, it's just so much more important,
Yeah, no kidding.
It doesn't matter on other cars anymore. It's like, well, wait till Tesla does that. It's just going to be cool. It was the same with Apple phones as well. Samsung might have some new feature first, but you don't really care. And well, if you like Apple anyway, and then you don't care until it's on your Apple phone. Apple might not get it for another couple of generations, but still, it doesn't matter until it's on Apple.
Absolutely.
It's going to be a similar following with Tesla as well. Like I say, I want other EVs. I want there to be competition, and they'll come up with some unique things, and it will improve the cars, and it will just be better for the industry. And I don't even think the competition is that big a deal for Tesla, because at the end, in I don't know, by the end of the decade, most of the profit, as far as I can see, is probably going to come from the software anyway.
That's going to be a margin enhancing feature for sure. And I don't think full self-driving has to be level 5 for that to happen. It just has to feel close enough for people to start front running that a little bit. like, if I live in the States, like, if I live in Florida or somewhere a little more progressive with tech, with robo taxis, and I see that Tesla's getting to a point where it's like, okay, and maybe the prices go up in anticipation anyways. But I get to a point where I'm bullish on the immediate future on robo taxis. Then you just go out and you just buy the pack, right? So, and I guess that's why I think seeing Tesla increase the price to FSD was encouraging, because it tells them that internally, that they're seeing some sort of advancement there. So hopefully I get beta in Canada soon enough.
Yeah, I think I'm gonna have to wait a while for beta in New Zealand, but we'll see. I was using my autopilot tons on this drive I just did, and I wouldn't want to be without it now. It's brilliant. Like, even just autopilot is good enough for
it's good enough.
a lot of the
Yep.
Yeah,
absolutely.
It's incredible. And my version is so far behind what beta can do. It's a brilliant product. I mean, I was using it a lot, like even at going 100 kilometers an hour, and then you're going round a bend, and then there'd be like a semi truck coming the other way. I would occasionally just turn it off, just like freaked out a little bit. But like a lot of the time, it was just incredible how it drove.
Yep.
And it's obviously going to be the future.
Oh, absolutely. By the way, we got CNBC here. What are they saying?
I think I certainly have been knocked back in surprise on just how extraordinary that growth is. So we have to hear about Texas, we have to hear about Berlin, and how much they can continue to see new production come online. But Fremont right now, they're saying they can do north of 600,000 vehicles there. So again, to me, this comes back to they seem to be outperforming. I'll say this about the stock. And again, I don't like the valuation, and I'm not going to suddenly change on that. I think it's 80 times. But I will say that Tesla has actually been remarkably not volatile, and in fact is probably pulled back in line or even a little bit less than Ford and GM. And at a time when everyone was talking about EVs on the way up, that which gave those stocks a boost, Tesla wasn't hurt by the competitive landscape. So it's actually been remarkably low vol, and I think there's more vol yet to come here. But so far, so good. I've been surprised by that as well.
Yeah, the forward PE as we have it is actually 100. So, Pete, would you pick on that valuation, or seeing what the growth the company can deliver is? Would you say, you know what, that's all right by me?
Oh, I think for now, I think you could still say that, Melissa. I mean, and quite honestly, I'm looking at these numbers, and as Tim pointed out, I mean, that the margin number is definitely something that's impressive. How about that free cash flow, though? I mean, that was outrageous too. Was it 2.7 billion? And all of a sudden you wonder, do they have enough demand? Yeah, they got demand. They only got 4 days worth of inventory. So they are cranking. They are moving. They're doing everything they want to do. That valuation has never looked very appealing for any of us, but they do own the space. They have 71% of the market in EVs in 2021. They really do own the space still. I know we bring up Ford, GM, and all the other European companies and everybody else as far as competition, but this is the ownership of that competition. They own the EV space, and they continue just to be miraculous on what they are able to accomplish. So I think it's an impressive quarter. I can understand why the stock's not necessarily moving the way we would like to see it after the numbers that we are seeing that they came up with. They was absolutely incredible. But this is a stock that, to Tim's point, it's been interesting, because the one pushback I'd give you, Tim, would be this. The implied volatility of the options in Tesla has been through the roof. For a long time, they were at this level where they are right now. Then they pulled back for the last year or so. They've been trading about half of these levels. So there is something out there in terms of volatility. And then we're talking about day in and day out volatility. Let's not forget, this is a stock that just this month has been as low as 860, as high as 1200. So there is some volatility there with this stock. And I think this is a really interesting spot right now. As a matter of fact, I did buy some calls today, so we'll see. I'm above where the market is right now. I think I hold the 950 strike calls. So we'll see if that actually can get anywhere moving towards that direction. But before the Fed,
market
today,
going up on that news.
The levels where it was trading made me think that there was something very positive. The numbers are positive, but the reaction's not quite as positive as I'd hoped.
Yeah, so does this tell you, Steve Grasso, that it's really the context, it's really the backdrop of the markets that's going to dictate how Tesla trades, even though Tesla is very much a story stock?
Yeah, I would have thought it would have been hit. To Tim's point that he said it outperformed the other automakers, I would have thought because of its growth and because of its PE that you stated, trading at 100 times, this one should have been slammed in the face of rising rates. It hasn't been. So to Pete's point, when you look at the Cybertruck, or he didn't mention it by name, but Cybertruck and Ford and all the other competition, is Tesla getting a pass because they were the first ones to the EV market, or are they going to get hit because of competition?
Oh my God.
If they have a delay in the Cybertruck, that means that Rivian and Ford are going to beat them to the rollout of the pickup truck.
All right.
If that's the case, then Ford, that was up 80% for a year ago performance, then you have to look at that on a pullback. Even though it's recently pulled back 20%, you might want to get back in on a Ford. Rivian is definitely being priced as a risk asset in the face of higher rates, and that's why it's been demolished.
Rivian, which according to reports today is ramping up production of its first vehicle. Meantime, let's get a reaction from Fast Money friend Gene Munster of
Oh,
Blue
Gene's
Ventures.
on. This is good.
He's a managing partner there. Always good to speak with you. What's your take here? You like the quarter?
I do, Melissa. And just taking a step back, I think important context is Tesla is growing deliveries at 5x faster than the overall auto industry. Their profitability on a gross margin per vehicle basis is more than 4x greater than the auto industry, a 5 and a 4x. And I think that kind of those two metrics stand alone. And there's a sense of deja vu in the conversation. Seems like every quarter we hear about Tesla beating numbers, margins going up. And I think it begs the question, what's going to change going forward? And I just kind of want to jump to that when I think about the context of the quarter. And I think that this gap, this incredible gap that they have, they're up 71%. GM, I think, was down 44% in terms of deliveries in the December quarter. That gap is going to close at some level. It will not, or it will narrow. I don't think it will close. But the profitability piece, and this is critical because for Tesla to have an outsized market cap relative to deliveries from the other car makers, they need to have outsized profitability. But I think that profitability piece is still underappreciated about what they're building. And I would just put this last piece in here, is that the numbers were good. They were actually better than first glance. They were probably even better than as you normalize some of the numbers for one-time effects like CEO compensation. The numbers were probably better because you can look at things like FSD and some of the revenue. Despite all of its controversy, they're recognizing very little piece of that. That's something the other car makers don't have that will be accretive to margin long term.
Yeah, Tesla had a line in its release, Gene, that really caught my eye, and that is that it had its highest quarterly operating margin among all volume OEMs. This, according to the most recent data available, quote, demonstrating that EVs can be more profitable than combustion engine vehicles. So really sort of underscoring that notion that Tesla's got it while the other OEMs don't so far on the profitability piece. Elon Musk wasn't on the call last quarter. He's going to be on the call this quarter. What do you think he's going to say?
I'm hoping for Cybertruck pre-order numbers. It's been a long time since they've updated that. I think your conversation with Phil around Model 2, the earlier car, I'm keenly focused on that. I don't think we're going to hear much about that, in part because they start talking about a new lower price version coming out. They start selling against themselves. And I don't think that they want to do that. They have said that they will be in all vehicle variant classes over time. So undoubtedly, those are going to come. But to answer your question regarding Elon on the call, I think it's just going to be related. I hope he's going to give some insight around the orders. And if it just, by the way, my bogey is I think it's could be as much as 1.5 million. Compare that to Ford, the F-150 Lightning. I think they're right around 250 or 300,000.
All right, Gene, keep us posted on that. The stock is positive right now, up by 0.4%, about 16 minutes to that conference call. We got an after-hours alert on Netflix.
What's funny is they keep going back to the conversation about EV market share. And it's so funny because right under their nose, if they just looked out broadly speaking, and they forgot, it's like talking about smartphone market share in the late 2000s, right, when iPhone was coming out. It's not the metric to look at. EVs are going to cannibalize all ICE sales eventually. And if they're not with free markets, governments are going to make everyone transition to EVs anyways. And I find it so funny how they talk about Rivian.
Yeah. Yeah. But also, I mean, ICE cars are just going to get more expensive as well on the other side of it. So EVs will become cheaper and ICE will become more expensive, and ICE will become less convenient and EVs become more convenient. I mean, I drive past gas stations now and I'm just like, oh my gosh, I can't believe I used to have to go there like once a week and fill up. And It's just a much superior way of transport, you know. And you've probably seen those memes of like a BMW X5 engine compared to a Tesla motor, and just how they compare and how much more simple it is. And like, it's just going to be these battery prices coming down. Eventually they're going, I mean, I think they could get down to like $2,000 or $4,000 a battery pack eventually, you know, within time, within maybe a few years, especially Tesla with their new in-house LFPs. So it's a much lower cost version of transport that is better in every way.
Yep.
And things are only going to get better from here. They only get better. The charging will only get faster. There'll only become more and more charging stations everywhere. And the range will only get better. Everything will only get more efficient. It's only going to get better.
Yeah.
And we're barely at the start of it too.
We're at the start. 100%. We're at the start of it. And on top of that, I think what's important is honestly, looking at Rivian and Lucid, for example, despite them really not taking up much market share, right? I'm almost more bullish on pure EV plays than I can be on legacy sometimes, because the strategy oftentimes is confused by, I think, a lot of execs. And of course, they know better than I do because they're in the inside baseball. But I think it's confused to be the same playbook. Whereas I think, EVs are an entirely different playbook altogether when you talk about car manufacturing, of course, with batteries.
I mean, I think what you're saying, you can see how they can't let go of their legacy systems just in the way they design their cars. I talk about this on my videos. They still use these grills at the front. They can't get rid of these. They still using all these old stuff in the cars. They can't let go of all these buttons everywhere. They just don't want to let go of. They're just too attached to their old ways and their old systems. And maybe there's too many people with their opinions, and they end up having to compromise on everything, or they're just too worried to take the risk of jeopardizing their initial brand of what their customers, or what they thought their customers wanted. But it's a shame, really. They could be making some pretty cool EVs. I almost kind of like some of them, or at least if they had, obviously FSD and a bigger screen and everything, and better range. It's tough though. They just still can't make any jump in this range issue. They're like, even the new ones come out, all they're doing is putting in bigger batteries, really, to compensate, to get closer to Tesla. It's the efficiencies like in the powertrain and the motor. So like Rimac, the supercar company, the electric supercar company.
Okay, no, I'm not familiar with that.
Actually, it was Porsche. Porsche bought, I think, 45% of Rimac, and that was where the powertrain technology came from the Porsche. They didn't even invent it themselves or design it themselves. They had to buy it from Rimac, and Rimac now has associated with Bugatti now as well, because Bugatti is Volkswagen brand, and I can't remember if Rimac is now merged with them or something like that. So the next Bugatti should be electric with the Rimac technology. I mean, but Volkswagen, that size of company, they still couldn't make a good enough powertrain for their EVs. They had to acquire it. They are just suffering, and it's been years and years now. Like, it's going on, and we would have expected some improvements, surely some reverse engineering or something. Open patents they have as well. It's just strange how no one at all there's Tesla just a cut above everyone else. No one is showing any signs of getting close to this technology, by which I mean a range, a suitable range at an affordable price.
You know what it's like, and this analogy is going to go over probably a lot of people's heads because it's so dumb, but it's kind of like going to the gym, right? Tesla went to the gym, put in the work, did the workouts, and Legacy just wants to take steroids a little bit and buy the businesses out and not do the learning, not do the heavy lifting of trying to figure out what it's actually. Oh, sorry?
Yeah. Get some implants.
Do whatever you need. And I guess from their perspective, they're like, well, aesthetically speaking, we can be the same. When it's a lot of the learnings and a lot of, like in free markets, really, it's the learning, it's the getting better, it's the trial and error, it's the failure, and then moving on and taking those learnings in-house and adapting on them. And so you're kind of stress tested a little bit. So when you do face circumstances that you can't really handle, you can at least rely on your past experiences and your engineering in-house, right? To kind of get past. It kind of seems like that's kind of where the dichotomy is right now of people of kind of the EV landscape. And it's kind of like, for example, for me, as we were buying an EV or we were looking to buy an EV, we went to Nissan, we went to Chevy. And what we realized was after doing our research, just because a battery pack says so-and-so kilowatt hour, all right, so 60 kilowatts or whatever, or Tesla 60, those aren't apples to apples. You can't make the comparison the same. You have to look at, and this is so annoying because as me, a simpleton that doesn't care about a lot of the engineering back then behind EVs, I was like, well, just tell me which one is the best battery. And they're like, well, you got to know how the cooling system's like. You got to figure out how the battery, how the battery management system is to figure out, how's the degradation going to be like? Because degradation is a big problem in EVs, right? And so Nissan, credit to Nissan, Nissan made it a little bit easier because on the Nissan Leaf, there's actually 12 bars of degradation. So day one that you buy your Nissan Leaf, it's 12 out of 12 bars. And over time, as the battery degrades, the bars go down. So you can buy with some level of confidence in a Nissan Leaf and know how crap the battery is degraded. Whereas I think a lot like Chevy Bolts, for example, it was hard for you to know unless you plugged in a OB2, whatever monitoring system and then ran this app on it. So we're still far away from it being super easy for Legacy to just flip the switch and get to the point. And we saw what happened, unfortunately, with the Chevy Bolt as well. Shows you that not both batteries are the same. But yeah, it's thoughts on that? I talked too much.
Yeah, I mean, the Leaf, I think in the US now is under $20,000 with the tax credit. That's super cheap, and this is kind of like, and they still haven't exhausted all their all the tax credits. You haven't even sold 200,000 yet. That would imply.
What's the tax credit on that? Is it 8,000 you're using?
7,500, I think, right?
7,500. It's a little bit more expensive up here in Canada, but yeah, it's by far probably the most economical EV out there.
This is one of the things about the Chinese EVs. People say, oh, the Chinese will just come in and they'll have low cost EVs, but we're at $20,000 already, and it's a credible brand. Nissan, people trust, reliable. People know the Leaf. Yet that is still, it still hasn't hit its 200,000 cap for to exhaust the tax credit. So I think people want Teslas. They don't want EVs necessarily. I was like, do you remember John DeLorean? Right? He said it's not a sports car. It's a DeLorean. And it's like, it's not an EV, it's a Tesla. But everyone else is making EVs.
It's not delivery. Yeah, and it's the brand.
It's still it's the computer robot on wheels that we have that we aren't even, people don't even understand yet. And you think EVs is a big movement, but AVs is going to be an even bigger movement. Because people are just going to be like, well, I don't want to drive anymore if I don't have to. Eventually, I'm sure people are going to get used to it and just think it's the norm. And even driving, like I was doing this drive, and I was thinking all these other people who are passing me at 100 kilometers an hour, whatever. And it's like, well, this is human error here. They could, easily just have an accident and hit me or something. It's kind of dangerous. And eventually, when it's the robots driving or it's Teslas, then it's just going to be a safer world for driving, as we know.
Yeah. Absolutely. And it's like buying an iPhone without an app store, right? It's like buying a smartphone, with knowing that you're going to keep the smartphone probably for not 2 years, because people don't keep cars on average for 2 years. They keep them to I think 5 years is the average length that people keep a car. So if you're keeping something for 5 or 10 years, you want to future-proof that thing. And if you don't have an app store, even, like, not that Tesla does today, but they have the ability to, you don't have that sort of infotainment future-proofing into it, you're kind of setting yourself up for that failure in the future as well, right?
Yeah. And then they've put all this antiquated hardware in it. Well, initially it was obviously new. Like I had a Mercedes before my Tesla, and it still had a mini disc player in it. I never used that once. It's like you put all this hardware in it, and buttons and things that eventually become useless, and it can all be done on the screen. I don't miss buttons for anything at all, And Tesla has some buttons on the steering wheel that are fine. They're great. That's enough. And eventually, when you got the autonomous driving, then you'll just be using the screen anyway. You don't need buttons for convenience. You're just going to be watching the screen, and that's the way Tesla are looking. They're looking, this is the car that we want in 5 years' time, but we're going to make it now and it will still be good enough. Like in 5 years' time, you don't need any buttons. You're just using the screen, and it's oriented around this screen that you can watch Netflix while you're driving through rush hour traffic or something.
Mm-hmm. Yeah, and mind you, we're probably we're probably a little bit away from that. But the point stands is that you want to future-proof your purchases. Something people talk about future-proofing their MacBooks when they're going to buy their next laptop. They're like, I'm going to buy a current year model so I don't have to buy it for the next 5 years or something. Talk about cars. Like, why wouldn't you do that with a car, especially with how much disruptive tech might be coming?
And especially how expensive a car is too.
How expensive, and how much it costs.
$50,000 on a car, and then 5 years later, it's like, oh well, mini displays aren't a thing anymore, so that's cool. I have to get a new car, I suppose. But Tesla's, they got Spotify or whatever the next one is. They can just use it in software. It doesn't matter. Yeah. It just updates like that.
By the way, you've probably made money off of your Tesla purchase right now with the depreciation that we're having, unheard of on cars at the moment, right?
I know. Also, like the model, the standard range I got, my wife, I even got an $8,500 tax credit on that too, which will stop in a couple of months. So I bought it at this time when the 0 to 100 time was still like 5.3 seconds, and the range was still like 278 miles or 268 miles. Like there was this like a brief period for like 2 months where it had the quick 0 to 100 time and the longer range, and now the 0 to 100 time's up to 5.8. So it was like just a really lucky time I got it. Plus this tax credit, and now it's probably gone up $10,000.
Oh yeah, no kidding, and it's crazy. It's actually nuts. I think we paid in Canada $52,995 minus our $8,000 rebate or $7,000, whatever it was. But now retail price MSRP on the Sandridge Model Plus here is $60. So and there's no EV rebate anymore because it doesn't qualify.
Really? Oh wow!
And they really had to make that decision probably the hard way, because anything over 54K in terms of an EV does not qualify. So so now it's 60 plus tax out of pocket, whereas it was 52 minus 8 plus tax. So it's just night and day. It's it's kind of crazy. By the way, Lee, I've been getting some messages on Discord here. Shout out to all the Juju Gang members. Did you see this in their report? They said future product in development. Little hint there. I don't know if I don't think they're going to, but this has to be the compact, right?
It's got to be the compact. And immediately that's what I thought.
In development. Okay. Yeah, I mean I guess that could mean anything. That could mean graphic development for all we know for now, right? Like it doesn't have to be manufacturing development, but
it's still, it's on paper now at least.
Yeah. So
and they've still that Shanghai is still just over 450,000. We're not getting the real run rate for that yet. The capacity. They're keeping that a little bit coy. Yeah.
I think they're trying to temper expectations a little bit. What is the run rate right now? It's 70 or 80 per month out of Shanghai. Yeah. So well, I think isn't Fremont a little bit high here though? It's at 600.
Okay, let's see.
It's at 100 for S. Well, I guess this year we really didn't get a lot of S and X's.
I think I estimated 130,000 deliveries this quarter for Fremont, so that's about right. Yeah,
that's about right.
Yeah. But I mean, we're expecting over 600,000 this year, yeah?
I think that assumes
50% increase that we expected, yeah.
Yeah, 50% is what Elon said, right? So do we know how they're going to...
It was a vague 50%. Like, was it 50% from what the rate was at the time, or was it 50% from what the alleged capacity is? I mean, they hadn't even hit capacity really until just like this quarter, I suppose. Right. That's the first time they've hit capacity. So yeah, but it'd be good to get that up like 650 or so. And then if China's up to like 1.2, then it's not going to take much to hit 2 million.
No. Yeah. Dave was making this point when he was on. He was saying he anticipates Tesla to be releasing their next vehicle details pretty soon here, because he doesn't know how they're going to be able to hit the growth past 2023, 2024 unless they do that in the next little bit here. So,
right, yeah, I've done numbers for that, and I've broken it down. And I think it is a possibility. In fact,
okay.
I can probably.
Yeah. Okay. Just with Model Y really scaling up, no, because it's such a popular.
Damn it. Yeah, I mean, it is going to be predominantly Model Y. Yeah.
Thank you, Singh, for the super chat again. By the way, I got the earnings playing here, so any minute they start, stay tuned to the stream. Lee, are you going to be joining us for the earnings call as well, or do you have to sign off?
I'll see what I can do.
Okay. No worries.
Okay, I might sign off by then. Yeah, I probably got to go through these reports thoroughly.
Sure.
So I had this 5 million target run rate. Well, I guess run rate target. Yeah. So this was without the compact. I thought they could hit a run rate of 5 million, and I've broken it down into factories instead of models. But this is for a what I thought was perhaps just in a quarter we could have 250,000 Model Ys just from Texas. So in Shanghai, 200,000 from there. 450, 550. Yeah, I mean, just so over 2 million. I'd have over maybe 2.2 million Model Ys a year when we're at 5 million run rate. And this is probably in 2024, the start of 2024, perhaps. So
Model Y
I think
demand is off the charts.
Pardon me?
Model Y demand is just off the charts. Probably way more than Tesla.
It is. I mean, you've got a 6-month wait or whatever for the $60,000 version. What will happen with a $45,000 version?
Absolutely. No kidding. The call's on now. By the way, Lee, thanks. If we don't get a idea later, if you have to sign off, no big deal. But thanks for coming on. It was a great time. Feel free to stay as long as you need to, or duck out whenever you have to.
All right, Yoshi, it's been great. Okay, I appreciate it all.
Okay, take care.
Hey.
Please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So just to recap, 2021, it was a breakthrough year for Tesla and for electric vehicles in general. And while we battled, and everyone did, with supply chain challenges through the year, we managed to grow our volumes by nearly 90% last year. This level of growth didn't happen by coincidence. It was a result of ingenuity and hard work across multiple teams throughout the company. Additionally, we reached the highest operating margin in the industry in the last widely reported quarter at over 14% GAAP operating margin. Lastly, thanks to $5.5 billion of million, small finger by the mouth, $5.5 billion of GAAP net income in 2021, our accumulated profitability since the inception of the company became positive, which I think makes us a real company at this point. This is a critical milestone for the company. So after an exceptional year, we shift our focus to the future. Texas and Berlin. So we've begun production at both Texas and Berlin. We started that last quarter. But that's not the most important thing. We're focused more on when to get to volume production and when can we deliver cars to customers. But I think it is worth noting that we and as the internet has observed, we've been making quite a few cars in Texas and Berlin. So in Boston and Berlin. So in Texas, we're building the Model Ys with the structural battery pack and the 4680 cells. And we will start delivering after final certification of the vehicle, which should be fairly soon. Capacity expansion will continue through maximizing output of each factory and building new factories and new locations in the future. Although we're not ready to announce any new locations on this call, but we will, through 2022, look at new locations and probably be able to announce new locations towards the end of this year, I expect. So in 2022, supply chain will continue to be the fundamental limiter of output across all factories. So the chip shortage, while better than last year, is still an issue. And yeah, so that's there are multiple supply chain challenges. Last year was difficult to predict, and hopefully this year will be smooth sailing. But not sure what you do for an encore to 2021, 2020. But nonetheless, we do expect significant growth in 2022 over 2021. Comfortably above 50% growth in 2022. Full self-driving. So over time, we think full self-driving will become the most important source of profitability for Tesla. Actually, if you run the numbers on robotaxis, it's kind of nutty. It's nutty good from a financial standpoint. And I think we're completely confident at this point that it will be achieved.
Wow.
And my personal guess is that we'll achieve full self-driving this year. Yeah, with at a safety level significantly greater than a person. So the cars in the fleet essentially becoming self-driving via software update, I think might end up being the biggest increase in asset value of any asset class in history.
Wow.
We shall see. It will also have a profound impact on improving safety and on accelerating the world towards sustainable energy through vastly better asset utilization. Let's see. So on the product roadmap front, there's quite a lot to talk about. I'm not going to go through every sort of thing that we're working on because I think a lot of them deserve product launches of their own, as opposed to a few minutes on an earnings call. So I'll talk kind of at a high level. Mostly at a high level. The fundamental focus of Tesla this year is scaling output. Both last year and this year, if we were to introduce new vehicles, our total vehicle output would decrease. This is a very important point that I think a lot of people do not understand. So last year, we spent a lot of engineering and management resources solving supply chain issues, rewriting code, changing out chips, reducing the number of chips we need. That was chip drama central. And that was not the only supply chain issue. So there was just hundreds of things. And as a result, we were able to grow almost 90% while I believe almost every other manufacturer contracted last year. So that's a good result. But if we had introduced, say, a new car last year, our total vehicle output would have been the same because of the constraints, the chips constraints particularly.
Right.
So if we'd actually introduced an additional product, that would then require a bunch of attention and resources on that increased complexity of the additional product, resulting in fewer vehicles actually being delivered.
970 after hours.
The same is true of this year. So we will not be introducing new vehicle models this year. It would not make any sense.
Okay.
Because we will still be cost constrained. We will, however, do a lot of engineering and tooling and whatnot to create those vehicles, the Cybertruck, Semi, Roadster, Optimus. And be ready to bring those to production, hopefully next year. But that is most likely. But like I said, it is dependent on that. Are we able to produce more cars or fewer cars? So in terms of priority of products, I think I think that actually the most important product development we're doing this year is actually the Optimus humanoid robot. This, I think, has the potential to be more significant than the vehicle business over time.
Wow.
If you think about the economy, it is the foundation of the economy is labor. Capital equipment is distilled labor. So what happens if you don't actually have a labor shortage? I'm not sure what an economy even means at that point. That's what Optimus is about. So, very important.
He's talking very quietly and slowly here.
Let's see, Drew, do you want to talk about the 4680 program?
Sure.
Or is this good right the right time?
Sure. Yeah. Sure. So throughout 2021, we focused on growing cell supply alongside our in-house 4680 effort to provide us flexibility and insurance as we attempt to grow as fast as possible. As we sit today, cells from suppliers is actually sort of exceeds our other factory limiting constraints that you mentioned, Elon, in 2022. Or to say differently, 4680 cells are not a constraint to our 2022 volume plans based on the information we have. But we are making meaningful progress up the ramp curve in Cato. We're building 4680 structural packs every day, which are being assembled into vehicles in Texas. I was driving one yesterday and the day before. And we believe our first 4680 vehicles will be delivered this quarter. Our focus on the cell, the pack, and the vehicles here is driving yield, quality, and cost to ensure we're ready for larger volumes this year as we ramp and next year. And the 4680 and pack tool installations here at Giga Austin are progressing well, with some areas producing first parts, and the internet has also noticed that. I was touring the cell factory here yesterday. I'm super pumped. It's like a really exciting accomplishment for us to bring everything into one awesome factory here in Texas.
Absolutely. And just to repeat Drew's point, we still expect to be part or primarily chip limited this year. So that's the thing. That's actually the driver. And that chip limitation should alleviate next year, and then probably we transition into a cell limitation, battery cell. It's total gigawatt hours of cell limitation, which is when the 4680 will become very important.
Agreed.
Thank you very much. And now Zach has some opening remarks as well.
The long opening remarks.
Yeah, thanks, Martin. As Elon mentioned, 2021 was a financially transformative year for the company. If we look across the full year 21 and compare that to 2020, our automotive gross margin, excluding credits, rose by over 600 basis points, enabled by work on cost reduction, utilization of our Shanghai factory for exports, and accelerating demand. OPEX as a percentage of revenue reduced despite the impact of one-time items and unique items, and operating income more than tripled, with operating margin reaching our guidance of mid-teens, and these margins are trending up. We also saw regulatory credits accounting for a relatively small portion of our 2021 profitability, which we expect to continue to reduce in materiality going forward. For Q4 specifically, automotive gross margin, excluding credits, increased to 29.2%, which is our highest yet. We do continue to see some impact of higher pricing on certain models and trims, as was the case in prior quarters. But please keep in mind that due to backlogs, changes in pricing will generally impact our financials in future quarters. Supply chain challenges and port congestion resulted in a significant increase in our expedite costs in Q4. We also took reserves associated with warranty and recall costs. Operating expenses were meaningfully impacted by stock-based compensation from the final 2 tranches of the CEO stock grant becoming probable and payroll taxes associated with the exercise of the 2012 CEO options. The total impact of these payroll taxes, warranty and recall costs, and excess expedites was just over $700 million in the quarter. Free cash flows have remained strong, reaching record levels in Q4 of $2.8 billion, despite increased capex. In addition to using cash to grow the business as quickly as we can, we have been retiring legacy and high-interest debt. Note that we plan to continue to utilize the ABS market for product-specific financing. As we look forward, we expect 2022 to be another significant and exciting year for the company. We continue to drive for vehicle volume growth at or above 50%, as Elon mentioned. And our plans show that this is actually achievable with just our Fremont and Shanghai factories. For quite some time now, these factories have been running below capacity due to macro challenges with supply and logistics. As Elon mentioned as well, from what we're seeing, the pace of growth in 2022 will again be determined by supply chain and logistics, which is quite difficult for us to forecast. Despite these constraints, it's important to begin the ramp of Austin and Berlin to ensure that we are prepared once limitations ease, enabling us to increase total output more quickly in the future. This will result in higher fixed and semi-variable costs in the near term, in addition to the usual inefficiencies as we ramp a new factory. We are also seeing inflation and rising commodity prices, which we expect to continue to put pressure on our costs. How this specifically impacts gross margins in the near term is uncertain, given a mix of both tailwinds and headwinds. However, we do expect to continue to see stronger operating margins as we grow our volumes and improve operating leverage. Over a longer-term horizon, we are quite optimistic about the expansion of margins, though. From the hardware side, we are aggressively driving manufacturing innovations and operational efficiency to reduce cost. And with the rapid development of FSD, software-based profits will ultimately become a strong addition to the profits generated by selling hardware. So congratulations to the Tesla team for a terrific 2021, and thank you to our suppliers who supported us. Looking forward to another great year.
I'd like to just second the thank you to suppliers. A lot of suppliers work very late nights, weekends, vacations around the world, and we're very grateful for that.
Thank you very much. Let's go to the Q&A from the investor side. The first question was on 4680 cells, which we already answered. So let's go to the second question. How is the progress of the $25,000 compact car? Can you give an update?
Well, we're not currently working on that $25,000 car. At some point we will, but we have enough on our plate right now. Too much on our plate, frankly. So at some point there will be. But I think that's sort of a question that it's sort of the wrong question. Really, it's really the thing that overwhelmingly matters is when is the car autonomous? At the point at which is autonomous, the cost of transport drops by, I don't know, a factor of 4 or 5.
Thank you. The next question from investors is, since we're talking product roadmaps today, how do you view domestic cooling and heating in the context of accelerating the sustainable energy transition? And how might Tesla's HVAC and heat pump advances fit it?
You want to talk about that, Drew?
I think from a mission perspective, it's very aligned. If you imagine replacing natural gas, water, and space heaters with electric heat pumps, it offsets something equivalent to like 80% of what a solar plus Powerwall system would offset. So it's very impactful. And we have learned a lot about how to make capable and reliable heat pumps that work in all environmental conditions, and are excited about the idea of working on that problem one day. We put it that way. It's definitely aligned with our mission to transition to sustainable, accelerate the transition to sustainable energy.
Yeah, I think it really becomes quite a compelling solution to the consumer, where you integrate the electric vehicles, charging, solar, energy storage, hot water, HVAC, in a very tight, compact package that also looks good. It just doesn't exist.
Yeah, I mean, the integration of those systems in a house,
That's Lars, by the way.
sorry, the integration of those systems in a house are no different than the integration of those systems in a vehicle.
Yeah.
The only difference is we do it all in a vehicle.
It's way harder in a vehicle.
And then
it's so constrained on mass and volume and energy. It's like you get to the house, you're like, wow.
Kind of easy problem.
Yeah.
But, obviously those systems are all just disparate, and what we've been doing with the Powerwall and charging solar is integrating them more and more. The next logical step is obviously HVAC and water and heating. So we will do that, and we will integrate it probably better than anyone has. But as you said, we have a lot of stuff on our plate.
Yeah.
So.
And obviously it integrates with your phone app and everything, and then the car can, the house can just heat and cool things because it knows you're coming home. Type of thing. It just doesn't need to be like randomly that temperature when you're not there, or
when the cat moves.
Yeah, exactly. Cat moves, exactly. So you just do sensible things and just work really well. I think it'd be just quite a game changer down the road. We got a lot of fish frying on it, so it is a thing we will do, but we're not committing to a time frame at this point.
Makes
And
sense.
people should do it anyway.
Yeah, if somebody else wants to do it, we are. Yes, please.
Yeah, it's super beneficial for achieving the goal here.
Yeah.
Thank you. The next question is, would you consider splitting FSD packages into perpetual and term licenses with a higher tier for both options for commercial use? A perpetual license could be attached to individual or business and not the vehicle itself.
Subscription.
No, I mean, it sounds maybe too complicated. We're just going to be focused on what solves for the fully considered lowest cost per mile or kilometer of driving, and these other so that's what matters. Like how do we maximize the efficiency of getting people from one place to another, and then charge them in a sensible way,
including the charging infrastructure. That's a big part of it.
Yeah, exactly. Charging for money and charging for energy.
Yeah.
Thank you. The next question is Dojo on track for summer 2022? And what challenges, if any, are you working through? Is Dojo necessary for FSD to operate better in cities like New York City? Or on a separate note, where should we expect the first implementation of Tesla bots? In your factories?
Good question.
There's a few questions in there.
Like 6 questions.
Yeah, Dojo appears to be on track for doing something useful in the summer of this year. I think the threshold that really matters is at which point, when does it become more competitive than a GPU cluster for training? And obviously, the GPU cluster is getting better, so it's a moving target. But that's the goal I've set for the team is the FSD team running our GPU supercluster needs to tell me that they want to use Dojo instead. That's a obvious sort of threshold. I don't know when that will. It's I wouldn't say success is 100% certain here. I think you would just generally want to overestimate eating options and underestimate ourselves. But it does seem as though we might pass that threshold next year with Dojo if we execute well. Dojo is not needed for full self-driving, but it is a cost optimization on training vast amounts of video data. Cost optimization also a rate of improvement. So if you can train models faster and have a shorter iteration interval, then you can make progress faster. So, not everything can be just distributed to a zillion deep GPUs. so there's some element of serialization there. So, and then if Dojo is competitive, then it does seem like the kind of thing where we would offer it to other companies that want to do neural net training.
That's
This
big.
is very much a neural net training optimized system. But in theory, it should be better than a generalized computing platform, or say GPUs, which were not really intended for the pixel shaders, not directly intended for optimizing training of neural networks. They just happen to work better than CPUs in most cases. So you can think of like Dojo as like a giant ASIC, optimized for neural net training, especially video or video-like things. But as like I said, we're not saying for sure Dojo will succeed. We think it will. We would encourage those who think this is an interesting problem to join Tesla. So.
Thank you. And the first use of Tesla Bot, whether it's in the factory or elsewhere?
Nice.
Yeah, the first use of the Tesla Bot, Optimus. The Optimus name seems to be sticking, at least internally. Optimus subprime. Like if we can't find a use for it, then we shouldn't expect that others would. So the first use of the Tesla Optimus robot would be at Tesla, kind of like moving parts around the factory or something like that.
Okay, thank you very much. And the next question on insurance. When do you plan on having your insurance service rolled out in all the states? International rollout timing in markets that have Tesla insurance, what kind of uptake rates are you seeing?
Yeah, we currently offer Tesla insurance in 5 states in the U.S. 4 of them are telematics, which is Texas, Illinois, Ohio, and Arizona. And then California, which has a more standard insurance offering based upon regulations there.
It should be clear, like we're pushing very hard for California to change the rules to allow informatics, which basically means that you're as safe as your driving is measured. So I think the current California rules are contrary to the best interests of the consumers in California, and should be changed.
Yeah, and that's evidenced by what we're seeing in Texas, where we've been in this market now for about 3 months. And what we see in the data is the frequency of collision by folks who are given a feedback loop on how they are driving is quite a bit lower than the frequency of collision otherwise.
Yeah, and we give people direct feedback on whether driving is safe. And if they drive safer, their insurance costs less, so they drive safer. It's great. It encourages Tesla insurance with informatics and real-time feedback, encourages safer driving and rewards it. I mean, monetarily, it's great.
Exactly.
Yeah.
And so we see that so far in Texas. Take rates have been quite strong. We measure this on the conversion rate from when folks quote to see what their monthly rate would be at the starting point to what percentage of them purchase. So we're very encouraged by the interest that we're seeing in Texas. And then we've had enough history in Texas to see what does the loss ratios look like and how do the economics of the program work. And we're on the right track there as well. So we're comfortable with what we've seen in Texas to move as quickly as we can to scale this across the U.S. Specifically on the question about when we will be in all states, this is a slow process because of insurance being regulated at the state level. And so we have to go through each of those processes with each of the departments of insurance at each state. But our internal goal here by the end of the year is to be in enough locations that 80% of our customers within the US could choose to sign up for Tesla insurance if they wanted to.
That's pretty good.
There's a lot of uncertainty around that based upon the regulatory processes, but that's our goal. And then as we make more progress rolling out in the states and each incremental state becomes a little bit less effort than the prior, that's when we'll turn our attention to the Europe market. We might be able to do that by the end of the year, starting to get work on Europe by the end of the year. We'll have to see how we progress in the US.
Thank you. Next question is, what is your expected max capacity from each of your current factories, Fremont, Shanghai, Berlin, and Austin, and timing for new factory announcements?
I think they're going to answer that.
I don't think we want to comment on that. That's
the surprise.
It's always possible to increase the output of any given factory. So you say, well, what's the max capacity? Well, it's difficult to say what that max capacity is because you put a lot of effort into it. You increase capacity quite a lot. I think looking at the big picture, you don't necessarily always want to increase capacity at one factory because your logistics costs of transporting cars needs to be considered, especially as the cars become more affordable. You want to have factories that are not like thousands of miles away from the customers. So even if you could increase output, it may not actually be the smart thing to do. So in the U.S., for example, with Giga Texas coming up, we would want to deliver, say, Model Ys that are going to the eastern 2/3 of the United States from this factory. The logistics costs are going to be much less. We will continue to increase output in Fremont and at Giga Nevada and in Shanghai and as I said at the beginning of the call, this 2022 is the year we will be looking at factory locations to see what makes the most sense, possibly with some announcement by the end of this year.
Thank you. And the next question is, what are the biggest obstacles for Cybertruck volume production besides battery shortage?
Batteries will probably not be the limiting factor in Cybertruck production. There's a lot of new technology in the Cybertruck that will take some time to work through. Okay. And then there's a question of what's the average cost of a Cybertruck and to what degree is that affordable? You can make something infinitely desirable, but if it's not affordable, that will constrain people's ability to buy it because they simply don't have the money. I'd worry more about how do we make the Cybertruck affordable despite having awesome technology. That's the thing that will really set the rate. Aspirationally, we'd like it to be, in terms of just a rough order of magnitude, we'd like Cybertruck to be at least on the order of 250,000 vehicles a year. But it'll take us a moment to get to that level.
Thank you. The next question is, how much of Tesla's margin improvement is from number one, economies of scale, number two, production line design efficiencies, number three, reduced transportation costs from multiple plant locations, and number four, pricing versus cost inflation, or number five, other sources? And how much further could margins improve and why?
There's basically four major factors if we look over the last year to the margin improvement in the company. And they're in no particular order here, but these are the big ones. So our mix of Model Y is increasing as we've ramped that to higher capacity in Fremont and also in Shanghai. And the reason that matters is the Model Y is a vehicle that carries a higher profit than the Model 3. Mm-hmm. And so that is helpful on our margins. And then as we increase the volume on that program with labor efficiencies, fixed cost amortization, they improve and the costs go down as well. The second one here is localization in Shanghai has been a huge help for margins for the company. And, the obvious things around logistics and duties is a big part of it, but we've also, that factory had a different line design, more efficient from the start. and we've been pushing the boundaries on the volume there. So that has been helpful. If you recall, at the beginning of the year, we also were in a transition to the new version of the Model S and Model X. And so as that has ramped over the course of the year, that has been helpful. And then we've also done various price increases in certain markets on certain models, which has helped there. So that's generally the story at a high level. And as we look over the next quarter or two, as I mentioned in my opening remarks in the last call as well, we have rampant efficiencies from the launch of Austin and Berlin. We also have pressures coming from inflation, supply chain, raw materials, et cetera. And so, where that nets out is hard to say in the immediate term. And we obviously, as a company, are going to be driving to increase margins as much as we can. But I just want to be realistic that we're launching 2 factories simultaneously here, and it unavoidably will add cost to the business as we do that.
Yeah, makes sense.
And as we look further out, and Elon mentioned this in his opening remarks as well, the software portion of the business, I think, is the one to really pay attention to. As full self-driving features get rolled out to more and more folks. I mean, for me personally, I prefer to drive my car with the FSD beta on. I think as more and more people experience that, take rates there, and then as we work towards the robotaxi space, there's actually quite a bit of upside on margins from a software perspective.
Mm-hmm.
Yeah, I think basically everything pales in comparison to the value of a robotaxi or full self-driving. Everything, that just tends to overwhelm everything.
Mm-hmm.
You just go from having an asset that has a utility of perhaps 12 hours a week for a passenger car to maybe around 50 or 60 hours a week. So 5x increase in the utility of the asset. The cost didn't change. So that's where things it's kind of blows your mind.
Robotaxi.
Thank you. And the last question from investors is, Elon mentioned level 4 autonomy could be achieved this year. Is it based off initial FSD beta rollout experience, or is level 4 ability predicated on Dojo being complete and online?
As mentioned earlier, Dojo is not required for full self-driving. It should have a positive effect on the cost of training networks. It's not just a question like does you get to full self-driving, but really it's kind of like the march of nines of reliability. Is it 99.999% reliable or 99.999999%? This gets nutty. So we obviously want to get to as close to perfection as possible. Frankly, being safer than a human is a low standard, not a high standard. People are very, very lossy, often distracted, tired, texting. Anyway, it's remarkable that we don't have more accidents. So so actually being better than human, I think is relatively straightforward, frankly. How do you be 1,000% better or 10,000% better? That's what that's much harder. But I think anyone who's been in the FSD beta program, I mean, if they were just to plot the progress of the beta in interventions per mile, it's obviously trending to, a very small number of interventions per mile, and the pace of improvement is fast. And there are several profound improvements to the FSD stack that are coming, the next few months. So I would be shocked if we do not achieve full self-driving safer than a human this year. I would be shocked.
Okay. Interesting. We'll be shocked.
Thank you. Let's go to analyst questions now. And the first question comes from Jed from Canaccord. Jed, feel free to unmute yourself and ask a question.
Hi, thanks. And congratulations on a great year. Elon, I guess my question's around the mega pack or your energy business. And so as we look at the strategy or the supply chain constraints that you mentioned, you have two different strategies, or it seems like, with Megapack and Powerwall. And I think the Powerwall was answered with 4680 and the 2170 opening up. So I was wondering if you could just talk about the supply chain and LFP for the Megapack and what we should expect for that.
Yeah, to be clear, we do think that all stationary storage, Powerwall and Megapack, will transition to an iron-based system, basically a non-nickel system. Manganese is also, could be part of the future, but primarily iron. It just comes down to iron, nickel. You need something that is formed in a star before a supernova, ideally. So, iron is. So there's a ridiculous amount of iron on Earth, as well as a ridiculous amount of lithium. So you can really expect all stationary storage to transition to iron over time, and like I said, with manganese is like a wild card. It's also less manganese. And I should say, like, we did shortchange the energy business last year, in that vehicle took priority over the energy side. So
not on cells, but on chips.
On chips, exactly. Yeah. We do see a very, long-term, probably terawatt hour per year energy business. Yes. So
terawatt hour per year.
It's very vast. Yeah.
That's helpful. Thank you. So you see that 22 is kind of the opening of that the energy business reaccelerating.
It's hard to predict 2022 because we still have lingering supply chain. There are still lingering supply chain issues globally. But I think the chip stuff, at least the chip side of things, appears to looks like it will alleviate end of this year or 23. I mean, there are a crazy number of chip fabs being built, which is great. The sheer number of chip fabs being built right now is exciting to see. Yeah. So, but there could be other issues. We're trying to anticipate those as much as possible, but predicting the future is difficult.
And the goal is definitely to grow it this year.
Yeah. It'll grow this year, for sure. It just, if we're simply if we're able to respond to demand, it might grow by like 200 or 300% or something, as opposed to sort of 50% or something.
Yeah. I mean, I think it's exactly that. I mean, it's a question of, does it double, triple, quadruple? I mean, either way, I think our plans are pretty ambitious for Megapack this year, and storage in general.
Yeah.
The exact amount of growth is hard to know. But ultimately, I mean, to Elon's point about the growth of this business, I mean, we need to be growing it faster than the vehicle business.
It will actually grow faster than the vehicle business once we can alleviate the damn chip constraint, frankly. So it will grow like kelp on steroids, basically, on the road. It needs to.
Right.
our primary mission is to accelerate sustainable energy. That's always been our primary mission, and we're trying to stay true to that.
Thank you. The next question comes from Ben Kalo from Baird.
Hi, thanks for taking my question. I was wondering on the R&D front, because like you said, you have so many fish frying. How do you organize the R&D, efforts, so that you can, start talking about all these new products? Is there like an incubator or some type of thing like that? But just structurally, I'm curious about that. Thank you.
We don't have incubators.
Or research centers.
We don't have research centers.
We're in it.
Yeah.
We work on things that go into our products.
Yeah, we're like, this is a useful product that the world really needs, and we're just like, let's make this thing, design it up and iterate fast, and then figure out how to make this at scale at a reasonable price. That last part is the super hard part. Many times I've said prototypes are easy, production is hard. We could whip out a zillion prototypes, but what's the point of that? You actually reach scale production, and have cash in exceed cash out. That's the super hard part. So
everybody needs to be in the factory often enough to be able to understand that last part of the equation.
Yeah.
And if you're in a research center,
I mean, doing them separately is like innovation for actually making products. So we don't think of it as R&D and then like the product development. It's just one fucking one go to just make great products.
There's just in general, societally, there's way too much value placed on the idea. It's like, like the idea. Everyone you can have the idea of going to the moon. That's not the hard part. Okay, going to the moon is the hard part by far. And the thing is that is true for really most products. So there's just way too much value placed in the idea of versus execution. We have ideas. We have a bazillion ideas. More ideas than we know what to do with. We have to sort through them and say which one are we actually going to go through the blood, sweat, and tears of bringing to volume production. That's the super, and then do that. That's tough. So,
and the closer you are to applying blood, sweat, and tears to actual production, the faster you'll be able to bring new things into actual production.
Yeah, exactly. So, you want a tight feedback loop with production.
Yeah,
that's like the office we're sitting in right now. Literally looks over the Giga Texas production line.
Oh man!
Like the offices are integrated into the factory.
That was funny.
Thank you.
Thank you very much. The next question comes from Tony Sacconaghi from Bernstein.
Yes, thank you for taking my question. I have two, please. First, you spoke a lot about FSD and how the economics could be very attractive going forward. I'm wondering if you could just share what your current attach rate might be for FSD on your vehicles, or how to think about the progress of your attach rate or revenue in FSD, let's say in 21 versus 20, and how much deferred revenue for FSD was drawn down during the year. And I have a follow-up, please. Thank you.
I think the FSD stuff, you really don't want to be looking in the rearview mirror. It will not be a good indicator for the future. You need to look out the front windscreen. Because it is such a profound step change. Effectively, long term, every car will have FSD. And the value of that will be a very big number. It's like you just look at this as asset utilization, and you have a passenger car, which normally is driven maybe 1.5 hours a day on average, maybe 10 hours, 12 hours a week. A lot of cars in parking lots. So we're spending money not just driving the cars, but storing them all over the place. We can get rid of a lot of parking lots if you have a car that is operating all the time. But there will be a challenge with traffic. So, we got like this little tiny baby company, the Boring Company, which I initially started as a joke, and now, but now I think it actually could be quite essential to alleviating the insane traffic that will happen when cars are autonomous, because you reduce the pain of travel and you reduce the cost of travel so dramatically that there will be a crazy number of cars on the road. I mean, I think it would be cheaper to go point to point with a robo-taxi, which is an autonomous Tesla, which every car we've made in the past 3 or 4 years will be capable of that, than a bus or a subway. It'll cost less than the subsidized value of a bus ticket. So people are not going to take the bus. If it costs you, I don't know, for argument's sake, $2 to travel 10 miles point to point, nobody's taking the bus, especially in cold weather or it's dark or maybe a little bit dangerous or the hell with that, door to door. People just do not understand how profound a change this is. It's not like some little feature. It's like the most profound software upgrade maybe in history.
Ooh, getting me excited.
Millions of cars suddenly have 4 or 5 times the utility than they used to have overnight.
Sounds bullish.
I don't actually know how to quantify that financially, except that it's some big number.
Okay, thank you for that. Elon, I was wondering if I could just follow up and ask you, you talked about your product roadmap and also your goal to keep growing at 50% per year or better. That would put you at 3.2 million vehicles or more in 2024. And I think you made reference to Cybertruck, maybe being 250,000 vehicles. If there is no $25,000 vehicle being worked on, is it really realistic to think that you can sell more than 3 million vehicles with 2 very high volume cars and Cybertruck in 2024? Or how do we think about that, or what else is missing in that equation?
Yeah, I mean, it is apparent from the questions that the gravity of full self-driving is not fully appreciated.
He goes back to full self-driving.
If an asset has 5 times more utilization than it's like dividing the cost of that asset by 5. So if you have a $50,000 car, it's like having a $10,000 car all of a sudden. But maybe better than that, because still you don't need anyone to drive. So the person can be engaged in productivity or amusement instead of having to, onerously drive through traffic. So it's probably better than 5 times. I don't know. Yeah. I mean, basically, if the cost of our cars did not change at all, we would still sell as many as we could possibly make.
Vague answer.
Thank you. And the next question comes from Pierre Ferragu from New Street Research.
Oh, Pierre.
Hey, thank you for taking my question. Can you hear me well?
Yeah.
I wanted to come back on batteries. So it's great to hear on one hand that you guys expect to sell like the first cars with 4680 this quarter, and at the same time that you don't really depend on that ramp to achieve your what you hope to achieve in terms of significant volume growth this year. And the question I had is, I understand well the ramp at 4680 internally, But I'd be curious to hear you talk about how you think about 4680 as being a form factor that your suppliers could adopt as well. And how you see in the long run, in the greater scheme of things, what does 4680 become? Is it going to be outside of Tesla the largest form factor for batteries? Is it something that you guys are going to deploy in all cars, whatever the chemistry, also in the Megapack, in all your energy storage business? And do you expect eventually a lot of other companies to use that form factor as well?
Yeah, on the 4680 as a form factor, yes, we've engaged with a number of our partners, our suppliers on the form factor, and they're all working on it. And they look at it the way we look at it, as a way to drive fundamental cost efficiencies in production, and also ultimately the design of the cell itself to drive the cost down of the cell. And so that's what's engaged. I mean, we're engaged because we think it's a good form factor. They're engaged because they think it's a good form factor, and we want people to make it for sure. To the question about should everything be 4680, it doesn't have to be. In the end, it's about cost competitiveness, scalability of manufacturing. And when you compare like a iron cell with a nickel cell, for example, like there are some just physics-based differences in what happens in certain corner cases that would drive different form factors. And we just have to be cognizant of that and design to that. So it isn't like the ultimate form factor for all things. There's other form factors that could be better for an iron cell, for example. So
yeah, we don't use 4680 at all for the iron set-based cells.
No.
Okay, thanks. And I have a quick follow-up on chips. So you've talked a lot about all this shortage and these supply difficulties. And I was wondering if you could give us some color on, like the power chips you need for inverters and all the power systems you're putting together versus like the more traditional logic chips, if the situation is different between the two. And should we understand from the situation today that you're working very hard also at expanding the scope of your suppliers? And should we expect like Tesla to take on board additional suppliers in the near term, especially on the power side?
Well, last year was chip hell of many chips. So silicon carbide inverters were certainly one of them, but
honestly, there's a lot of annoying, very boring parts.
Yeah, it's a ton of very simple control chips that run of the mill, literally, yeah, basic chips to control
voltage references, oscillators, just like very boring things.
Yeah, exactly, like the little chip that allows you to move your seat back and forth. It actually was a big problem.
Yeah,
couldn't make seats. So I like, but a lot of these things are alleviating. I think there's some degree of the toilet paper problem as well, where there was a toilet paper shortage during COVID, and like obviously it wasn't really suddenly a tremendous enhanced need for ass wiping. It's just people panicked and ordered and got every paper product you could possibly wipe your ass with, basically. And I wasn't sure, is this like a real thing or not? I actually took my kids to the HEB and Walmart in Texas to just confirm that this was real. Indeed, it was. And there was plenty of food and everything else, but just nothing, no paper products that didn't cause a splinter. So an odd choice for people to panic about.
Mm-hmm.
If those things are, if the end of the world's coming, I think toilet paper is the least of your problems. So I think we saw just a lot of companies overorder chips and they buffer the chips. And so we should see, and we are seeing alleviation in that almost every area, but the output of the vehicle is goes with the least lucky, whatever the most problematic item in the entire car is. And there's like at least 10,000 unique parts in the car. So, way more than that if you go further up the supply chain. And so it's just which one is going to be the least lucky one this time? It's hard to say.
Yeah. I mean, on a go-forward basis, right, the idea is to continue to drive simplification. So there are fewer unique parts, fewer of them. On the power side in particular, it's still like an area of like technological development where, the next chip can do the same thing with less die area. So like the total fab required to accomplish the function goes down. So there's still room to grow without needing more fab capacity. But in general, there's a lot more fab capacity coming. So that's like a win-win there.
Yeah. Yeah, it's just not a long-term thing because there's going to be there's a crazy amount of chip fabs being built, which is great.
Well, thank you very much. Unfortunately, that is all the time we have for this session. Thanks very much for all your good questions, and we'll speak to you again in 3 months' time. Have a good day. Bye-bye.
Wow. Well, folks, a lot of funny Elon things today, talking about the toilet paper shortage and how people didn't need more toilet paper for the pandemic, and yet here we were. So from the call starting to here we are now, we're essentially flat, right? We're essentially a scratch. We're 60, 70 basis points up after hours. I don't pay too much attention to this. This is kind of classic Tesla after hours, a nothing burger story, right? Dump to start off after hours, recover a little bit. When the call started, and Elon, here's a couple of things that I think I'm going to leave with for a summary if you missed it. I'm not going to go in for 10, 15 minutes here, just a quick one, okay? One thing he said is they can comfortably already meet their delivery guidance, 50%, with just Fremont and Shanghai, comfortably, right? Number two, he said that Austin is already going to have 4680s out this quarter. So that's good. That's good news because that gives us confidence that, hey, 4680s are just a couple of maybe months away here. So that's good. 2170s out of Berlin. I think we knew that from the shareholders deck meeting notes that we got. And so as we sit here and the Qs are up 1% after hours, the NASDAQ is up 1% after hours, SPY up 57 basis points, and Tesla about the same. So for tomorrow, I'm not saying this is $1,000 retest is likely to happen, but I'm saying the odds, I mean, there's pretty decent odds here. I mean, with macro, let's say being on our side, let's say if it is, FOMC passed us now. Jerome Powell no longer talking for the next little bit here. And today, remember, we pretty much tested 990, 987.54 was the high on the day today. So as we sit here, just being green, I mean, the question is really how much front running was done today? Because if a lot of front running was done today, then potentially in the morning we see a sell-off to open maybe for the first half an hour to hour as a lot of traders exit their positions if they haven't already after hours. There was no wild card situation. Elon's roadmap was interesting. He led with Tesla bot. He led with Optimus. It was less of a product roadmap, road list, but more of a, I guess, macro level from his perspective. It wasn't very formalized, I think. So again, okay. So hear me out for a hot second. Earnings was good. Earnings was awesome. It wasn't as bullish as a lot of Tesla analysts had projected with 32, 33, 34% gross margin or 15+% operating margin. But remember, I think it's important for us to sit back and just, first of all, recognize how important even maintaining 14, 15% operating margin is, 30+% gross margin is in the face of the amount of supply chain issues that are happening. And to be able to get to the level where now this can be more of a norm, right? Yes, I'm bullish on first quarter, a little bit less on January because of Omicron and everything that it's done. But moving forward, 4680s are supposed to be a substantial cost reduction into cars. So seeing how the unit economics of that go through, and on top of that, I'm going to throw a wild card in here. You guys know FSD. I talk about as kind of a call option for now as a kind of bonus. Man, you can't tell me Elon did not sound probably one of the most cocky, confident, bullish sounding FSD updates in a while. Let me know if I'm wrong. I'm reading the chat right now. but did he not? He sounded very confident with where FSD was headed. So, take that with what you want. I know Elon reiterates that quite often, that he thinks FSD is coming online, but he sounded very confident. So again, if FSD even comes, let's say, FSD full self-driving release happens, huge amount of deferred revenue to hit the books, not to mention the amount of people flocking towards buying FSD to be able to run a robotaxi network. And I think that's what Elon was kind of highlighting. There was a couple of times with a question about the $25,000 model. And if you didn't catch it, Elon kind of laughed at the question, because the question presumed that, if you're not working on the $25,000 model, how are you going to get this growth? And he kind of laughed because, first of all, they definitely are working on the $25,000 model internally. Dave Lee, for example, just said as much. And on top of that, I don't think demand is an issue for Tesla as they sit here right now. The whole call was a bullish Elon tone, says Digital. And again, we're not going to be hearing from Elon likely for the next couple of earnings calls. So it's good to at least hear from him on an annual basis on the Tesla earnings call. So yes, deadlines, Elon time, definitely put that out. But here's what I'll kind of throw out there. What's a little bit different with FSD this time, at least you can argue, is FSD is not only in beta, but it's out to the general public in beta a little bit with safety scores. There's renderings on your car. It just feels a lot more achievable, at least technologically wise, with the updates that they already have planted. The one big release to watch is FSD version 11, beta version 11. That's where the single stack comes in, highway driving and city driving, and see how that comes through. So there it is, up 76%, pretty much, let's call it flat to end the after hours trading session on Tesla. I want to say thanks for joining. How long have I been on, folks? I've been on too long. I don't even remember. 3 hours and 3 hours and 35 minutes. I appreciate if you tuned in for a couple seconds, a couple minutes, a couple hours, the whole thing. Much love to everyone. Hit like, hit subscribe on your way out. Do me that favor. I appreciate it. Thank you to our guest, Dave Lee. If you want to check out Dave Lee's interview, I'll timestamp it after this and I'll put it. It's in the beginning of this call, 15 minutes in. Lee from Tesla Economist. Go check out their channels. Awesome stuff they do. Awesome content that they put out. Go support them. I'm assuming you guys already do already. They're awesome. I love collaborating with people that are, like-minded, like to look at Tesla, like to talk EVs, like to talk financial markets. This is what we do it for. This is why I'm here, is because I have a good time talking about this sort of stuff. If I didn't like it, I wouldn't be here. I'll tell you that right now. So much love. And I see a lot of Juju Gang members in here as well. If you don't know what the Juju Gang is, it's it's a self-admitted club. But if you want to be a part of Juju Gang, bring your citrus next stream. If you want to join us on Discord, which is where the 200 plus of us chat on a consistent basis, join the Discord by joining the Patreon if you want. I just saw, by the way, Carrie, thank you for joining Patreon. Doesn't pop up on my stream, but thank you so much for everyone that supports the channel. Without you, stuff doesn't happen, right? So thank you for how many thousands of people that have watched. I appreciate you. I'll catch you in the next one. I'll have probably more videos out on earnings and tomorrow how Tesla price reacts to the market. But it's exciting times ahead nonetheless with Austin and Berlin coming on. Thanks, everyone. Thanks all the mods as well for modding the chat. Much appreciate to you, Marco, Sanju, everyone. Take care. Much love. Take care. I'll catch you in the next one, guys. Peace. I'll get some rest. Yes, for sure. Take care.